Hello all, myself Dr. Yogesh Patil and I am welcoming you all in RTP discussion session of JK Shah classes. Hope your preparation is going very smooth. Soon your exams are coming and I am wishing you very all the best for your examination in advance. So let's start with RTP discussion of cost and management accounting. The subject carries 100 marks weightage from exam point of view. Total 14 questions are given by Institute of Chartered Accountants of India in this RTP. We are going to discuss all the questions which are given. They are important from exam point of view and maximum of them are covered in our textbook of JK Shah classes. So let's start with the very first question, which is related to the material cost chapter of your syllabus of cost and management accounting. Let's start with the discussing question number 1. Question number 1 is from material cost, which says Sky and Company, an unregistered supplier under GST. This particular company is not registered under GST, purchase material from Y Limited, which is registered under GST. So our company is not registered under GST, but the company from where you are purchasing the material is already registered under GST. The following information is available for one lot of 5,000 units of material purchase. So given information is not related to a single unit. This information is clearly given for 5,000 units which you have purchased from Y Limited. Listed price of one lot is 2,50,000 rupees. This is the purchase price of one lot and lot size is given 5,000. So this much amount you have spent on purchasing 5,000 units. So while calculating cost of material, this purchase price we are going to add in our calculation. Trade discount is given. It is given at the rate of 10% on listed price. We always deduct trade discount from our calculation. After trade discount, the next item which is given. So according to the discussion till now, what all information is given? The very first information is given related to the lot size, and one lot size is mentioned here, which is 5,000 unit. The listed price is also available with us, that is 2,50,000 rupees, and trade discount is given, and according to our discussion we are going to deduct this trade discount from our calculation, as because of this particular discount your purchase price is going to get reduced. That's why this should be deducted while calculating the total cost. CGST, Central GST, and SGST, State GST, is given at 12%. Now breakup of 12% is available, 6% CGST plus 6% SGST, and credit not available. ITC is not available, means you can't claim this particular amount back. That's why this is straightforward expenditure which we are going to spend from our pocket. So this will result in increment of the purchase price, incremental purchase price we have to incur. So this is something additional cost we are going to incur. That is why it is to be added while calculating the cost of a product. So this question is entirely deals with only and only computation of total purchase price of the goods which you have purchased, of the material which you have purchased from the supplier. So while calculating the total cost of the material purchase, we are going to add all the amounts which we are spending from our pocket, and we will be deducting only those amounts which we are going to save, while calculating the cost. Okay, now let's see what is the next information related to. Next information says there is a cash discount of 10%. Cash discount is something called as discount allowed, and in cost accounting, discount allowed is always considered as a financial expense, and while calculating cost of the product, cost of the material purchase, we never consider financial expenses like interest on borrowing, right? No, like bad dates. Now these all are the accounting effects, like bad date, discount allowed. They are financial expenses, but sometime alternatively you can consider them as selling overheads also. So here, according to the given solution by the institute, this cash discount we are not going to reckon while calculating the cost of the material purchase because it is assumed as financial expenses. See, now here one important point is given. It will be given only if payment is made within 30 days. If you are making payment of all these purchases within the period of 30 days, only this particular discount is available with you. We need to check whether we have paid this amount within 30 days or beyond 30 days credit period we have taken. So accordingly we will be giving the effect. Anyway, if you are assuming it at financial expenses should be ignored while calculating cost of the product. Toll tax paid. Now this item will increase your cost as cost of the material purchase. That's why it is to be added while calculating cost of a product. Freight and insurance to be added to the cost of material because it is purchases related expenditures. Demurrage paid to transporter. This is something new which you are saying for the first time most probably. Now this is demurrage paid to transporter. What is the meaning of demurrage? Demurrage is the penalty which we are paying to the transporter for delaying the uploading activity of the material. Whenever you upload the material, no, that is also called as offloading activity. Whenever you are uploading the material with the transporter, in that case any delay when causes, so you need to pay some penalties in that case, and that penalty is called as demurrage. Now if you observe this demurrage information and explanatory part, then you will come to know that this is not a normal thing. It is not going to happen always. This is something called as abnormal loss for the company, and abnormal losses we never consider while calculating price of the material. This is the abnormal loss. It is to be directly transferred to costing P&L. It won't be recorded in the purchase price of the asset, in the cost of the material. Now commission and brokerage on purchases. Commission and brokerage of purchases is simply expenditure related to purchase. That is why we are going to add this while calculating cost of your material. Then amount deposited for returnable containers. Sometime your supplier takes some security deposit while dispatching the material. What he is going to do? He will be dispatching the material in containers. If you are returning them back, if you are returning those containers back to your supplier, he will be releasing your deposit at that particular point of time. So initial amount which you have spent towards this deposit is 30,000 rupees, but amount of refund on returning the container is 20,000 rupees. If you check these two items, then there is only expenditure which is amounted to rupees 10,000 which we have incurred, right? No, we have kept 30,000 deposit, but how much amount we are getting back? How much refund is given by the supplier? Only 20,000. That means straightforward 10,000 rupees we have spent for this particular event, for this particular activity. That's why in our cost statement only 10,000 will reflect. Now other expenses are given. They are 2% of total cost. They are 2% of total cost, means 2% of including this expenses cost. We need to calculate that amount. 20% of material shortage is due to normal reason. Now how much is the lot size given in the first paragraph? 5,000 units is the lot size. But when that particular material arrived to you, that particular time, at that particular time you came to know that 20% of shortage is there. Now 20% of 5,000, when you calculate it on calculator, you will come to know that 1,000 units shortage you have recorded. That means you have received only 4,000 units in a lot size. Shortage is to be deducted from the total lot size. Shortage means nothing but the amount or the quantity which you have received lesser as compared to the given order. The payment to the supplier was made within 21 days of the purchases. You have made your payment within 21 days. That means this condition is getting fulfilled. This condition is getting satisfied. That cash discount is available only when payment is made within 30 days. That means you have availed this cash discount. But as this is financial expense, we are not going to record this cash discount while calculating cost of material. Now what exactly we need to calculate? You are required to calculate cost per unit of material purchased by Sky and Company. 1 unit cost they are asking us. They have given you the cost items which are related to 5,000 unit, and they are asking us to compute only cost of 1 unit. And if you check the suggested answer, only copy and paste you need to perform. The very first thing which is recorded is the listed price of material. Sir, listed price of material is given. Yes, it is given for all 5,000 units. Listed price is given for all 5,000 units, which is 2,50,000. You can check from the given question. Here this information is mentioned that the listed price for one lot is 2,50,000 and that 2,50,000 is recorded first. Then trade discount is given 10%. According to our discussion, this discount is to be deducted while calculating the cost, and that's why trade discount is deducted from your calculation. You can see same effects are given here. Now trade discount is 10% of invoice price and your invoice listed price is 2,50,000. 2,50,000 into 10%, you will get 25,000, and when you deduct that amount from the listed price, you are going to get the net price. Once net price is available with you, you are going to give the effect of the next transaction, that is of your CGST and SGST. Both are 6% each, and whenever these GSTs are given, you should charge these GSTs on the net amount of the material, that is the net purchase price. Net purchase price is 2,25,000. On 2,25,000, first we have charged CGST at 6%, and then we have charged SGST at 6%, means total 12,000 we have added to the purchase price. Net purchase price got increased by 12%, and after adding this GST, the subtotal is given 2,52,000. It is very simple question of calculation of cost per unit. Now in addition to this, if you check cash discount, we are ignoring, but after that toll tax paid is given and freight and insurance amount is given. This both the amounts we are going to add to our cost, and that's why if you check the solution, this 5,000 and 17,000 is added. Along with that, commission and brokerage on purchases of 10,000, it's also added to the purchase price of the material. So all the cost, all the expenses which you have spent for purchasing the material, we are adding up, and obviously abnormal items we are excluding. As far as next item is concerned, that is deposit amount of returnable containers, though this deposit is 30,000, 20,000 is refunded by the supplier. So net amount which you have spent towards this particular containers is 10,000, and that is why if you check, this 30 and 20 is adjusted and 10,000 is recorded in the total cost column. Now total, if you add up all these values, you are going to get 2,94,000 as your total cost. But guys, this is not your total cost. In this total cost, we should add other expenses which are 2% of the final total. 2% of final total means when your final total overall cost of material is 100 rupees, your other expenses consist 2% proportion of them, and which means remaining computation is equal to 98%. We are going in the reverse order. When you multiply this, when you cross multiply this, that is your 2,94,000 multiplied by 2 divided by 98, you are going to get 6,000 rupees as your other expenses, which is given in the question. Other expenses are 2% of total cost. So just reverse calculation is needed to understand this particular calculation. 3 lakhs is your total cost, but guys, 3 lakhs is the total cost which you have incurred for 5,000 unit. But have you received 5,000 quantity at the end? No. The last point says that 20% of material shortage is noticed due to normal factors. If 20,000 material, 20% of material shortage is noticed by the company, that means 1,000 units or 1,000 quantity of the lot size you haven't received. That means this 3 lakhs rupees expenditure you have spent on 4,000 units. So simply 3,000 divided by 4,000 units, you are going to get your cost per unit as rupees 75, and this 75 rupees is computed. See guys, this is the simple question based on per unit cost calculation where total costs are given and total quantities are given. Relevant costs we added, relevant discounts we deducted, we computed our total cost. Then we came to know that total cost which we have incurred, that cost we have incurred not on 5,000 units. This is the cost which we have incurred on 4,000 units. That's why 3 lakhs rupees we divided by 4,000 units and we calculated the cost per unit, which is equal to 75. So here some notes are given. Whenever you are calculating GST, GST should always be computed on the net price. We discussed already. Cash discount is treated as interest and finance charges and hence it is ignored. Alternatively, it can be considered under selling overheads in your cost sheet. Demurrage is the penalty imposed by the transporter for delay in uploading the material, and that is why it is abnormal item. It is not the recurring element. That's why it is also ignored from the calculation. And shortage due to normal reason should not be deducted from the cost or to a certain total cost of good unit. Good unit, whatever we have received, those units we have recorded. So these are the reference notes given by the institute. So this was the very first question which is given from material costing, which we completed just now. Let's start with the next part, which is again important, and the next question which is from the category and the chapter called as employee cost, and same kind of question is there in the JKSC study material, JKSC textbook. You can refer that particular question. The same question number 14 is given in May 22 textbook. If you check, you are going to get the same numbers but of different employees. Now same question, let's discuss question number 2, which is from the employee cost. A total of 108 labor hours have been put in a particular job card for repair work engaging a semi-skilled and a skilled labor. Name of the laborer is Mr. Deep and Mr. Sam respectively. So Mr. Deep is your semi-skilled laborer and Mr. Sam is your skilled laborer. The hours devoted by both the workers individually on daily basis for this particular job are given below. For completing this particular job, 2 workers have worked. They have given some time, they have devoted some hours, and the daily breakup of hour is available with us. Now on Monday, on Tuesday, on Wednesday, Thursday and Friday, total 10.5 hours, 8 hours, 10.5 hours and 9.5 hours and 10.5 hours worked by worker. The skilled labor also worked on Saturday for 10 hours, very important point. So these are the individual hours which are given in the question. Both the workers have worked for 10.5 hours on Monday, for 8 hours on Tuesday, for 10.5 hours on Wednesday, 9.5 hours on Thursday, 10.5 hours on Friday. These are the normal working days of the week. On Saturday, only skilled laborer have worked for 10 hours and name of your skilled laborer is Mr. Sam. So Sam has worked on Saturday also for 10 hours, but your semi-skilled worker has worked only and only on 5 different days. Let's see the next information. What is given? Sunday is a weekly holiday and that is why no working hours are given on Sunday. And each worker has to work for 8 hours on all weekdays and 5 hours on Saturdays. There is a policy of this particular company. Company says that each worker has to work for 8 hours on all weekdays, means on Monday, Tuesday, Wednesday, Thursday, Friday. Every worker has to work for 8 hours, whether skilled or unskilled, irrespective of category, despite of category of worker, all the workers will be working for 8 hours on normal days and 5 hours on Saturday. So Saturday can be treated as half day. The workers are however paid full wages for Saturday, that means 8 hours for 5 hours work. Here is something called as benefit available for the worker. The worker is going to work only for 5 hours on Saturday. He will be getting paid not only for 5 hours, that worker is going to get paid for all 8 hours, means 3 hours extra payment we are going to give him on Saturday. Semi-skilled and skilled worker is paid ordinary wage at the rate of 400 and 600 rupees respectively per day of 8 hours labor. Now this wage rate which is given in the question is not given on hourly basis. Wage rate is available with us on daily basis and per day number of maximum hours are given 8 hours. So if you want to calculate rate per hour, you only need to divide total daily wages by daily hours. So 400 divided by 8, your daily wage rate is 50 rupees and per hour computation for second rate can also be done in the same way. 600 divided by 8 hours, here wage rate is 75 rupees. So your semi-skilled worker is getting paid at the rate of rupees 50 per hour and your skilled worker is getting paid at the rate of rupees 75 per hour. So just we converted daily wage rate into hourly wage rate for our understanding. Further, the workers are also paid dearness allowance at the rate of 20% on the basis of basic wages which we are paying to them. We are also paying them a dearness allowance at the rate of 20%. 20% dearness allowance is to be paid in addition to the basic wages paid to the workers. Now, last paragraph is very important. Extra hours worked over and above 8 hours are also paid at ordinary wage rate. However, overtime premium of 100% of ordinary wage rate is paid if a worker works for more than 9 hours in a day and 48 hours in a week. Very important paragraph. Very important information is given. Generally, your workers are going to work for 8 hours a day, right? If your worker is going to work for more than 8 hours, that is to be considered as your overtime. And overtime premium which we are going to pay them is to be computed at a rate of 100% of the ordinary wage rate. Ordinary wage rates we have already computed on hourly basis. 50 rupees for semi-skilled and 75 rupees for skilled worker, right? So, whenever your workers are going to work for more than 9 hours in a day or more than 48 hours in a week, two conditions we need to fulfill. If worker is working beyond 9 hours a day, that extra hour is to be considered as overtime. Normally, workers work for 8 hours, but 9th hour is also to be paid at ordinary wage rate. Overtime is applicable only and only when worker is working beyond the limit of 9 hours. Worker has worked for 10 hours, say for example, then 10 hours we are going to divide into two parts. Normal working hours 8, extra hour 1 which is to be paid at same wage rate, at same basic wage rate, but beyond this 9 hour, if worker is working for any extra hour, then that extra hour is to be considered as overtime, and overtime rate is exactly double of your basic wage rate. Sir, where it is given? It is given here 100% of ordinary wage rate, means he will be getting ordinary wage rate plus 100% overtime in that, means double amount you have to pay for the extra hours which are worked by the worker over and above the limit of 9 hours. So, this is a very important point. So, daily minimum 9 hours at ordinary wage rate, and if your worker is working beyond 9 hours, then for those extra hours for overtime we will be paying him double amount. One more example, if any worker has worked for 11 hours, how we are going to bifurcate this 11 hours plus 8 plus 1, this is the first breakup where ordinary wage rate we are going to use. Beyond 9 hours, he has worked for 2 hours, for these 2 hours we are going to make payment at the double rate. So, what we exactly need to do? Let's read the information. You are required to compute the wages payable to Mr. Deep and Mr. Sam. That is, Mr. Deep is your semi-skilled laborer and Mr. Sam is your skilled laborer. For both of them, we need to compute the wages payable. So, for that computation, first you need to compute the number of hours to be paid for first worker and number of hours to be paid for second worker. Now, how this number of hours to be paid for calculated? See here, simply you need to prepare one table for that. Now, here if you check the Deep is the semi-skilled worker, and in semi-skilled workers calculation all the days are given if you check, no? Now, Monday, Tuesday, Wednesday, Thursday, Friday and Saturday. As far as your Monday is concerned, let's go to the table first. As far as your Monday is concerned, on Monday your worker has worked for 10.5 hours total, right? How to bifurcate this 10.5 hours? Out of 10.5 hours, normal working hours 8, then extra hour 1 which is to be paid at normal rate, correct? So, out of 10.5, normal working hours 8, extra working hour 1, so up to 9 hours no overtime. But if your worker is working beyond 9 hours, then for that beyond 9 hours we will be considering those extra hours at overtime. Look at this breakup. Now, out of 10.5 hours which your Deep has worked for on Monday, they have recorded 8 hours under normal hours column, 1 hour at extra hour column where he will be getting same and basic wage rate for the payment, and remaining 1.5 hour is recorded under overtime. As far as your overtime hours are concerned, we are going to make payment for this 1.5 hour at double rate, and double rate means we will be paying the payment of 3 hours instead of 1.5 hours. Sir, why double rate? Because see, if worker is giving you 1 hour overtime period, you will be paying him at double rate, means you have to make payment of 2 hours, though worker has worked for 1 hour. No, double payment means what? You need to give payment for the double number of hours. If worker has worked for 1.5 hours as overtime period, you are going to pay him the payment of 3 hours. So total payment is to be done for 8 plus 1 9 and 9 plus 3 12 hours. Same way, if you check the Tuesday, breakup for Tuesday is quite easy. Total number of hours worked on Tuesday 8 hours. So total 8 hours we have recorded under normal hours, no extra hours, no overtime hour. He has worked for 8 hours, he will be getting paid for 8 hours. So therefore total payable hours are 8 on Tuesday. As far as your Wednesday is concerned, again 10.5 and 10.5 same breakup as Monday. You can check same as Monday, 8 1 1.5 to be paid at 3 hours, and 8 plus 9 plus 3 is equal to 12 hours is the computation. As far as your Thursday is concerned, total number of hours worker worked for 9.5. So we should bifurcate this 9.5. Out of 9.5, 8 hours are normal hours, 1 hour is extra hour, which is to be paid at normal rate. Extra half an hour is to be paid at double rate. That's why double hours are considered. 8 plus 1 9, 9 plus 1 equivalent overtime hours. So total payment is to be made for 10 hours. Next one is the Friday. On Friday, your worker has worked for 10.5 and the same bifurcation for 10.5 hours as far as your Deep is concerned is recorded, and Deep is a semi-skilled worker. He is not working on Saturday. You can check that. On Saturday, only skilled laborer is working. On Saturday, semi-skilled worker is not working. That's why simply we have added. So if you check, your weekly total is not getting exceeded than 48. No? What was the limit given? Daily 9 hours, beyond 9 hours overtime. Weekly 48 hours, beyond 48 hours overtime. Here 48 hours is not getting exceeded. But whenever worker has worked for more than 9 hours, we have taken that extra hours under the overtime calculation. So this 44 hours plus this 10 hours, so actually has worked for 5 hours only. But we will be making payment for 10 hours. So total payable hours are 54. Correct? Same way, if you compute the hours payable for Mr. Sam, who is skilled worker, then same classification is needed as far as your Monday is concerned, your Wednesday is concerned, and your Friday is concerned. Your worker has worked for 10.5 hours. If you check this column, you are going to get the same bifurcation on Monday, Wednesday, and Friday. MWF. See, 12 hours bifurcation is given. It is same as the previous discussion. As far as Tuesday is concerned, on Tuesday your worker has worked for 8 hours, so no extra hour, no overtime calculation, nothing. He has worked for 8 hours, he will be getting paid for 8 hours. So it is very easy while calculating Monday, Tuesday, Wednesday, Thursday, Friday computation. On Thursday your worker has worked for 9.5 hours. Out of 9.5 hours, 8 hours normal, 1 hour extra to be paid at normal rate, but remaining 30 minutes, remaining half an hour to be paid at double rate. That's why we have taken equivalent 1 hour, and total 10 hours are computed. So Monday, Tuesday, Wednesday, Thursday, Friday. Here the important point comes Friday. After Friday, next point is the very important, and that is your Saturday. On Saturday, what are the normal working hours mentioned in the question? According to the given information in the question, normally on Saturday 5 hours working is allowed to the worker. Now 5 hours working is allowed to the worker. That's why I have recorded here 5 hours. Then remaining hours we are going to consider under extra hours, right? No. On Friday, this particular skilled worker has worked for 10 hours. Out of 10 hours, see you guys, out of this 10 hours, 5 hours are recorded, correct? No. Out of 10 hours, 5 hours are recorded. Now remaining 5 hours were to record. Now for recording this remaining 5 hours, this is something very important. On Saturday, if you compare your Saturday with the normal working days, if you compare your Saturday with normal working days, then on normal working days, your working period, working hour, working time is 8 hours, correct? Out of 8 hours, we have recorded 5 hours first. So remaining 3 hours we are recording here. Now try and understand what this 3 hours stands for. Your Mr. Sam will be paid for equivalent 8 normal working hours at ordinary wage rate, correct? So, though your worker has worked for 5 hours, he will be getting paid for 8 hours, means remaining 3 hours also we are going to pay at ordinary wage rate. That's why these 3 hours we have recorded in the ordinary column, that is the extra column, because we are not going to pay double amount to him. we will be paying the same amount, basic wage rate amount to him. That's why 3 hours I have taken under extra. Sir, if we take this 3 hours in overtime, in that case you need to pay double amount, no? That is why first record the maximum possible things in the extra column. So Mr. Sam will be paid for equivalent 8 normal working hours at ordinary wage rate, though 5 hours of working is required on Saturday. Done. Now total number of hours he has worked for. Total number of hours he has worked for 10. Out of 10 we have recorded 8 till now. Further extra 9th hour worked will also be paid at the ordinary wage rate. Correct, no? When we are going to make payment at double wage rate is applicable only and only when your worker is working beyond 9 hours. On Saturday he has worked for 5 hours, so normally you are going to pay 5 hours. In addition to that, for extra 3 hours you are going to pay again according to the normal rate, and for 9th hour also, you are going to pay the normal wage rate. So out of this 10 hours, for first 9 hours we are going to pay him by using our ordinary wage rate, but for the 10th hour, sir, 10th hour is the extra hour, remaining 1 hour we should consider under overtime, and overtime is to be paid at double rate. So this 9 hours plus this 2 hours, total 11 hours are recorded for the purpose of payment. So 11 equivalent hours we are going to pay for, and therefore total amount payable to Mr. Sam is equal to 65 hours into wage rate applicable to him. So this Saturday calculation is very, very important. Now total work done on Saturday is of 10 hours. Out of 10 hours, this 9 hours are to be paid at ordinary wage rate, and remaining 1 hour is to be paid at double wage rate. That's why remaining 1 hour is recorded under overtime. Now what is asked in the question? Question haven't asked us to show the breakup of number of hours. Question simply asks us to calculate the wages payable to both the workers. If you want to calculate wages payable to both the workers, very first I have computed my basic wages while discussing sum only. 50 rupees for semi-skilled per hour, 75 rupees for your skilled worker per hour. Sir, where is this calculation? It is given, sir. No, it is not given. It is computed. It is our hard work. Look here, we have already computed this 50 rupees and 75 rupees. In addition to this, company is giving them dearness allowance at the rate of 20%. So basic wages into 20%, you are going to get this both the values. When you add this, you will be getting your hourly rate. So per hour, you will be paying them 60 rupees and 90 rupees respectively. Only we need to calculate total wages payable, and for that purpose we should record the total equivalent number of hours, and equivalent number of hours are available with us. For 54 hours we are going to make payment to Deep, and for Sam we are going to make payment for 65 hours. So 54 and 65 we have taken for our calculation. 60 into 54 you are going to get total wages for Deep, and 65 into 90 rupees per hour you are going to get wages for the Sam. This was the very, very important question of your employee costing, and the same question is covered in JK Shah classes textbook classwork section also. Kindly revise this before examination. The next question which is given in this RTP is from the chapter Overheads Absorption Costing. Now this one is the very huge chapter and lots of calculations are there, correct? Now as far as absorption costing is concerned, the very first concept which is covered in this chapter is calculation of absorption rate by using 6 different methods. Hope you all are aware about those methods. Output method, machine hour method, labor hour method, material cost method, labor cost method, and your prime cost method. The second part of absorption costing comes with the computation and accounting treatment of overabsorption and underabsorption of overheads. And the last part, which is the subcategory of this chapter, is your overheads ascertainment. Now, first objective of the chapter overheads is to compute the absorption rate of individual production department. For that particular purpose, whenever overheads are available with you, those all overheads, first you need to allocate that then you need to apportion the common overheads to the production department, and then reapportionment takes place whenever service departments are given. So basically theme is very clear. As far as overhead chapter is concerned, the basic and very basic you can say primary objective of this chapter is to calculate absorption rate of departments which are available in the factory. In factory, when there are multiple production departments are available, you need to compute multiple absorption rate for each and every production department. But problem comes, accounting becomes little difficult, your sum solving becomes little lengthy when service departments comes into picture. Your production departments, guys, they are revenue generating departments, but your service department are only support department. They are going to incur some expenses not for generating revenue. They will be incurring some expenses for providing services to production department. So whatever expenses incurred by the service department is not incurred for them. That expenditure is incurred for production department. So it is our duty to reapportion the expenses and overhead of your service department to the production department by using different methods. There are multiple methods available in your syllabus. Out of them, first method is your direct method. When your service departments are independent, in that particular case, direct method can be used. Sir, what is the meaning of independent service department? When your departments are not exchanging services in between them, amongst them. They are not giving services to each other. They are giving only services to production department. That means they are independent, and in that particular event, you have to use the direct method for the reapportionment of overheads of service department. When your service departments are partially dependent. Sir, what is the meaning of partially dependent? When one service department gives services to second service department, but in return, your second service department is not giving any services to the first department. This particular case is called as partially dependent service department, and the applicable method in this case is your step ladder method, which is also called as step down method. And the last category comes where both the departments, both the service department are not only giving services to production department, they are exchanging services with each other also. First service department is giving services to second service department. Second service department in return giving services to first service department. This kind of dependency is called as interdependency, and when service departments are interdependent, in that case, three different methods you can use. Out of them two methods we have already covered in our classroom. First one was your repeated distribution method, which is also called as your cycle method. It is called as continuous distribution method, where again and again you need to perform few cycles to distribute the amount of overheads which are available in your service department's column. Second method, which will give same answer as your repeated distribution, and that one is your equation method, simultaneous equation method, which is also called as a reciprocal method. These methods we have already discussed. We have already solved some questions based on all this method. Third method, which is covered in RTP, is important from exam point of view, and that is trial and error method. Let's see what kind of question is covered in RTP. Overhead chapter, absorption costing method, where Pritz Limited is a manufacturing company having two production department A and B and two service department X and Y, and the following budgeted data for the March 2022 is available with us. Now here very first important point, direct material and direct wages are given. Students, this is the important point. Whenever direct expenses, direct wages or direct material, any element of direct cost is given in the question, you have to take care of one thing. When direct material, direct wages are given in the question, they form part of prime cost as far as production department is concerned. Correct, no? In production department, what is the name of chapter? What is the name of chapter? Chapter's name is overhead. So we should record only overhead while calculating the rates. These are not the overhead. Material cost, labor cost is not the overhead. They forms part of your prime cost. That's why we should exclude them while calculating overhead, while recording overhead as far as production departments are concerned. But whatever expenses are incurred by your service department, whether they are direct in nature or indirect in nature, sir, whatever expenses are incurred by your service department, whether they are direct in nature or indirect in nature, we should treat them always as overhead, because they are incurred by the service department for rendering the services, not for the production purpose. So direct material of your service department is the indirect cost for production department. Direct wages of your service department is the indirect cost for your production department. So think from production department's point of view. As we are calculating absorption rate of production department, this is the important point. Normally, maximum student commits mistake while understanding this particular concept. So, whenever direct cost items are given for production department, we should exclude them while preparing statement, and when direct cost is given for service department, we should include them while preparing overhead statement. So, this is the data given. Factory rent, power, depreciation, general lighting, perquisites, total amounts are given, but total amounts are not further bifurcated amongst department. So when this bifurcation is not given, when any expenditure, when any overhead is given as a common expense, in that case the step which comes is called as apportionment of overhead by considering common and most appropriate basis. As far as your factory rent is concerned, factory rent should always be divided by taking areas proportion, areas ratio. As far as machine power is concerned, machine power is to be divided on the basis of HP hours. Sir, what is HP hours? It's horsepower hours. Sir, horsepower is given, but horsepower hours, how to calculate? You should multiply your horsepower with your machine hours. What we need to calculate? HP hours, that is HP into R. How many horsepower machine, how many horsepower power you have consumed on hourly basis for running of your machine, that's what we are calculating. So as far as your first department is concerned, your HP hours are 50,000. Your HP hours for second department are 80,000, then 15,000 and 25,000. One similar question is there in JK Shah classes textbook. If you check question number 8 of your textbook of JK Shah classes by 22 batch, you are going to get the same question, but only in that question one more production department is given. Here only 2 production departments are given, concepts are same. Now in this HPR's ratio, that is 50K, 80K, 15K and 25K, you should divide the amount of your power. Depreciation to be divided on the basis of value of machine. So depreciation you charge on machine, that's why value of machine is the most appropriate rate basis to be considered for the purpose of apportionment of your depreciation value. For general lighting apportionment, light point you should consider, and light points are given, and one important point is available, perquisites. What to do with this perquisites? Now that is the new and important point which we never considered in any of the question in our textbook. Now when perquisites and other overheads are given, this is not related to machine, this is not related to asset, this is not related to area, this is not related to light point, this is not related to horsepower. When any other overhead is given in the question, other overhead is to be divided on the basis of direct wages. When nothing is mentioned, this is very important point, it should be divided on the basis of direct wages, and direct wages cost is given. This is very important point of this question. First time it is given. Sir, why we are considering direct wages? What is given? Perquisites. Perquisites we pay to whom? Our workers and employees only, no? So whenever, sir, what is perquisites? These are the extra benefit other than the basic wages. If you have paid them wages in the same proportion, you need to pay them perquisites, and that's why perquisites are to be divided on the basis of direct wages ratio, and direct wages ratio you are going to get from here. See here, direct wages for all 4 departments are given. So very first point, whatever expenses they have given in total, we should bifurcate them according to the most appropriate basis, and appropriate basis we have just now discussed. What is given after this? The technical assessment of the apportionment of expenses of service department is as under. Service department reapportionment ratios are given, basis is given. Whatever service department X expenditure is there, that expenditure we are going to divide in 3 parts between A, B and Y in the given proportion, in the given margin, in the given percentage. The expenses of service department Y we are going to divide again in 3 parts between A department, B department and X department. So these are the reapportionment basis margins given in the question. Now we are required to prepare a statement showing distribution of overhead, and this distribution of overhead is called as a primary distribution of overhead, where we are going to show the apportionment called as primary distribution. Question also asks us to prepare statement showing redistribution of service department, and redistribution is also called as secondary distribution of overhead, and this secondary distribution of overhead can be performed with the help of few of the methods, and methods are given. Very first, equation method, that is simultaneous equation. Third one is repeated distribution method, and the new method which we are going to learn through this RTP discussion session is trial and error method, how to solve question by using all these three methods. The very first method which we are going to use is for your apportionment wala thing, and apportionment thing is clearly given in the question, that is called as primary distribution. Now if you check direct material part of the calculation, direct material is given directly, but they haven't recorded anything in A and B column, because A and B are the production department. This is what we have discussed. Same is applicable for your wages. They are also directly given, but we have taken only figures which are related to service department. So as far as your direct cost elements are concerned, you should record them only and only in service department column. Factory rent is bifurcated area wise. Your power is bifurcated according to HP into machine hours. Your depreciation is bifurcated according to capital value. Ratios are given. Then general lighting is divided according to the light points. We have solved this kind of question for multiple times. That's why this bifurcation is very easy for you. And perquisites are divided according to direct wages basis. So what you only need to do, total amount divided by total basis. This basis is given in the question, and then according to the available computation you need to use the ratios, and ratios are given. Factory rent 2:1:1:2. So from where they have computed this ratio, sir? See here, factory rent is computed on the basis of 500, 250, 250, 250. It is 2:1:1:2. If you check the value of asset, then value of asset is 2:4:1:1. This is the ratio. This ratio you can easily compute by considering the given information, and in the same ratio you need to bifurcate the available amount. See, this all rent ratio, then your value ratio, all the ratios are given in the question. So finally primary distribution will get over. It is very simple. But when primary distribution will get over, no, you will be getting total 4 amounts with you. You will be having 4 amounts available with you. First amount related to your production department. Second amount is related to your production department B, but along with them service department overheads are also available with us. But according to our discussion, we can conclude one thing, that service department expenses are not incurred for service department. They are indirectly incurred for production department only, no. Your service departments are rendering services to production department. So these all values of 9,20,000 and 11,40,000 we should reapportion between A and B, and for that purpose various methods are given in the question. Now as far as redistribution is concerned, try and understand. Now let's assume that the service department number 1 X, the total overheads of this particular department are X, and total overhead of your second department are Y. This is my assumption. Now kindly focus on this total overhead. Total means what? So total means 9,20,000 and 11,40,000. No, total means 9,20,000 is the own expenditure of X plus some expense of Y. X is going to bear. Sir, who has told you this particular thing, that 9,20,000 plus additional expenditure, where it is given in the question? See here, if you check this table, then your X department, your department X is ready to take the burden of 5% expenses of department Y. Means Y department is going to put 5% of their overhead to X column. So X will be having 2 expenses. Sir, which 2 expenses? First expense is 9,20,000. So X department's own expenditure is 9,20,000 plus 5% of Y he is going to take. No, that's why you can frame the equation, you can form the equation. Your Y's total overhead will be rupees 9,20,000 plus 5% of Y department. Same is applicable for Y. Your Y department is going to bear 11,40,000 own burden, and in addition to this 11,40,000 own burden, X is going to put 20% in Y column. X is going to put 20% of Y column, means Y is ready to bear 20% of X expenses. 20% of X means your Y department is going to bear own expense of 11 lakh 40. In addition to that, 0.2 X, that is 20% of X, is ready to incur, is ready to bear. That's why I have formed total two different equations. If you solve this both the equations simultaneously, if you substitute value of Y in X, then you are going to get some equation like this. You will be getting Y equation. Then again, when you solve this, after solving this equation, you are going to get your Y value, and when you substitute this Y value in first equation, you are going to get your X value also. So once this both the values are available with you, you can start with your redistribution. Sir, how to start with redistribution? Now, overhead as per primary distribution. According to the primary distribution, the overhead amount which we have computed, no, those amounts are given in the question. Sir, where are the amounts? You can see here. Now total amounts are available with us. Their own amounts are recorded here, and once own amounts are recorded, they are 9,20,000 and 11,40,000. You can put them like this: 9,20,000 and 11,40,000. These are the two values. Now we computed X value, we computed Y value, correct? No? X value is 13,24,000. So we are going to deduct this 13,24,000 from X department, and we are going to deduct 9,86,869 from Y department, and this both the amounts we are going to transfer, redistribute to department A and B. If you check department A and B, department A and B's values are available with us. They are 7,60,000 and 6,90,000. The same values are recorded here, correct? Now 986,869. Extremely sorry, this is department X value. Department X value is available with us. I have recorded here reverse amounts. So here it will be 9,86,869. This is the value of X which you have got, and here value of Y we are going to put 13,24,000. Now this 986,869 we are going to divide between two parts, part A and part B, that is department A and department B. Sir, how much percentage we are going to transfer to this department? 55% and 25%. Sir, from where this percentage are taken? See here, A will carry 55% burden, B will carry 25% burden. So amount of X we are going to divide in 55-25 ratio. 55-25 apportionment is done. Now some students, see, they calculate like this: 9,86,869 into 55%. Sir, yes, amount is computed. Yes, exactly 55% you are going to put in A, 25% we are going to put in B, and the remaining we are going to put in the Y column. Done? They haven't given in the suggested answer, but according to our practice, according to our solution, the remaining amount we are going to put in the Y column. Once this is done, amount of Y, the amount of Y which we have computed, 13,37,374, is to be further apportioned in 60%, 35% and 5%. So 60%, 35% in production department we need to reapportion, and once this reapportionment is done, you are going to get the total. This is the end of first method. Equation method is quite easy, and it is, you can say, it is not going to consume time as compared to your repeated distribution method. Now come to the next method, which we haven't covered in our classwork, and that is trial and error method. Though discussion was there in your classroom, but trial and error method some was not there. This is the easiest method. This is one of the easiest method of the redistribution, which we are going to cover with this particular discussion. Now as far as your service departments are concerned, they are having 9,20,000 and 11,40,000 expenses, correct? Now if you check the apportionment, apportionment says that department X expenses to Y expenses proportion is 20%. Sir, it is given in the question. Yes, clearly mentioned in the question that Y is going to bear 20% of department X expenses. My department X expenses are 9,20,000 into 20%. I am going to put in the Y column. So my Y is going to bear this particular amount. So because of this calculation, my Y amount gets increased to 13,24,000. Understood? Okay, this is the first step. Second step says you should apportion Y department expenses to X department. Now what is the proportion given? Y department expenses into 5% we are going to put in the X column. My Y department expenses are now 13,24,000. Correct? 13,24,000 into 5% you will be getting X department's value. So see how we are calculating. First we recorded original amount of overhead which we computed in the primary distribution total column. 9,20,000 into 20% we recorded in Y column, we computed total. 13,24,000 into 5% we computed again. Once this is done, again we are going to start with the reapportionment, sir. Reapportionment of your department X expenses to Y. Now how much column is there in X? How much amount is there in X column? It is 66,200, correct? So 66,200 into 20% I have recorded in second column. 66,200 into 20%, 13,240 I have got. Now 13,240 into 5%. So first you need to calculate the amount, then some percentage of that amount. Again you are going to get one more amount, then again same percentage of that amount. So zigzag case you are going to use. So first I took 9,20,000. Let me repeat this again. 9,20,000 into 20% I have recorded that amount in the other column. So 184 plus 1140 I got 1324, then into 5% I computed 66,200, correct? That 66,200 I have taken again, I computed 20% of that, I calculated 13,250. So department amount, then second department percentage. Same department amount, second department percentage. Now 13,240 into 5% when you calculate, you are going to get 662, and this thing will continuously will go on. Now 662 again into 20% when you calculate, you will be getting 132.4, rounded off figure is recorded, and 132.4 into 5% you are going to get 6.62. You need to perform this trial and error till you get this single digit. Once this single digit comes, you have to close your calculation. You are going to close your calculation when single digit comes on your calculator. So this is the time pass exercise, you can say. Whenever trial and error method is asked in the question, first put original overhead values. Then calculate according to the given percentage the value of second department. Then on total, compute the first department percentage. Then compute second department percentage, first department, second department. Maximum 3 times you need to repeat this particular distribution. This is the trial and error method, which is very simple. And the last method is very time consuming method, which is called as your repeated distribution method. See, now according to this discussion, if service department cost you are going to distribute amongst the production department, I have computed my service department cost. This is 986,869 and 1337,372, and the same amounts I have taken and I have bifurcated them between department A and B in the given proportion. Sir, where is the given proportion? In your question, 55%, 25%, 60%, 35% I have divided. And after dividing this, again I have taken total according to my trial and error method. Hope your concepts are getting clear. Clearly understood. We started with equation we have already done. Trial and error is the next and new method which we discussed in this particular illustration, where every department's expense you need to calculate according to the given percentage. When these expenses are calculated, you need to take the total, and those total you have to reapportion between department A and B. They are the production department. And the last part where repeated distribution is going to take place. This is time consuming method, but not at all difficult. This method is going to consume time, but no method is going to harass you like this particular method. It is time consuming. Now first, all the expenses, all the overheads I have recorded here. Out of them, first I have deducted 9,20,000 in the given proportion in the table, that is 55%, 25% and 20%. I bifurcated this value in 3 parts. Then I taken subtotal, and that subtotal again I bifurcated into 3 parts, and this thing deliberately you need to repeat. Purposely you need to repeat, because this method's name itself suggests you repeated distribution. You need to repeat this distribution at least for 3 times. So first distribution, second distribution and third distribution is given, and finally they have given you the total amounts of overhead associated with production department A and B. The very time consuming sum of overhead we have just discussed. Hopefully you have understood all the concepts. Please revise this particular question before examination. Let's move to the next question based on activity based costing. Yes, after absorption costing, the next connected chapter, which cannot be treated as separate chapter, but it is given in the separate chapter according to your textbook. The name of the chapter is activity based costing. So there are two methods of calculating and valuing the overheads. The traditional method is called as absorption costing, where only 6 methods we can use. And the latest and modern method, which is more approachable and appropriate, is called as your activity based costing. And in activity based costing, the basic focus is to be given on each and every activity which is conducted or performed by the company. Now, for each activity, you should calculate rate, and according to that rate, you should apportion the overhead. This is the theme of this chapter. Now, in RTP, the next question which is covered is from the chapter activity based costing only. This kind of questions carries weightage of 10 to 12 marks from exam point of view. Let's have a discussion of this particular question. PCP Limited belongs to the apparel industry. It specializes in the distribution of fashionable garments. It buys from the industry and resells the same to the following 2 different supermarkets. So they are not manufacturer. This particular company is purchasing the garments from industry. They are the intermediators, and the same garment they are selling to your different supermarkets. So reselling activity they are performing. Supermarket A and supermarket B, there are 2 supermarkets are given. Supermarket A dealing in adult garment group is given, age group is 5 to 30. And your supermarket B is dealing with the kids garment and the age group is given 5 to 10. So there are 2 different age groups, and accordingly they have bifurcated the supermarkets. The following data for the month of April in respect of PCP Limited has been reported as follows. The average revenue per delivery. This is the revenue given, but it's not a total revenue. Delivery wise revenue is given. So total number of deliveries you need to use for computing the total revenue of each supermarket. Average COGS is also given, and this COGS is also available according to 1 delivery. So deliver your garment for a one time. Supermarket A and supermarket B generates how much revenue and they spends how much cost. This is what covered in this particular table, and along with this number of deliveries are given. So if question ask you to calculate total profit, or say for example total revenue or total cost, you need to multiply the given data with 660 deliveries and 1650 deliveries for supermarket A and supermarket B. In the past, something related to past is given. PCP Limited has used gross margin percentage to evaluate the relative profitability of its supermarket segment. This one was the practice of this particular company, that evaluation they used to made on the basis of gross margin percentage, and gross margin percent is nothing but GP ratio they used to compute in past. Sir, how to calculate GP ratio? For calculating GP ratio, that is gross profit ratio, gross profit divided by net sales into 100 formula you should use. So supermarket wise profitability can be computed. The company plans to use activity based costing for analyzing the profitability of its supermarket segment, and this is something called as future estimation. As far as past is concerned, they used to only calculate GP ratio for analyzing the performance of the company, but in future they are planning to implement the ABC, that is activity based costing system, for analyzing the profitability of the supermarket segment. Something related to the actual information is available. In the month of April, the April month operating cost other than COGS. Sir, what is the meaning of operating cost other than COGS? Other than COGS, the remaining cost is nothing but overhead. So this is something given related to overhead of PCP Limited are 16,55,995. So this much cost they have actually incurred toward overheads in the month of April. This is the actual cost given. These operating costs are assigned to 5 activity areas, means this cost is bifurcated into 5 different parts, 5 different activities. the cost in each area and the activity analysis including cost driver. Sir, what is the meaning of cost driver? Cost driver is nothing but basis which we are going to use for the purpose of apportionment of cost. For the month of April are available. If you check, they have bifurcated this 16,55,995 into 5 parts, where first part is store delivery activity, second one is the cartons dispatch activity, shelf stocking activity, line item ordering activity, and last one is the order processing activity. So total 5 activities they have identified. They have bifurcated the 16,55,995 into 5 parts, and along with that the basis to be used for the computation of cost per activity is given. Sir, what basis you are talking about? This 390, 500, 415, 250, 64, 845, 345, 400 and 4,40,000 are to be divided on what basis? They are to be divided on the basis of the given cost driver, and given cost drivers are available with us. They are store deliveries, that is number of deliveries, total carton dispatch to store per delivery, hours of shelf stocking, line items purchase order and purchase orders by customers. These are the basis given in the question. By using the same information, they have given month of April related data, the total number of deliveries, number of cartons, then average number of hours, number of items per order and total number of orders. Everything is given. Sir, what this table stands for? This table stands for all the basis. Activity wise totals are given for both the supermarket. What we need to do? Question says you should compute gross margin percentage, that is gross profit ratio for both the supermarkets, right? Then as well as you should compute the operating income. Sir, what is operating income? Your gross profit minus other expenses gives you your operating income for each supermarket segment using the activity based costing information as far as your first point is concerned, which clearly asks us to calculate the gross margin, and for gross margin computation we should have 2 items available with us, and they are gross profit and net sale. Net sales, sir, what is net sales? Net sales is nothing but revenue. Revenues are given in the question, but revenues are given according to one delivery. You can check. If you check the first table, these are the revenue per delivery. You should multiply this revenue with the number of deliveries so that you can get the total revenues. And if you check the solution, they have computed first total revenues by multiplying the same. Correct? For calculation of GP, revenue, then next element which we are going to deduct is your COGS, cost of goods sold, and per delivery cost of goods sold is available, which again you need to multiply with the number of deliveries to get the total amount of COGS. So total COGS is also computed, and sales minus COGS you are going to get the gross profit. Done. Question says calculate gross margin. Sir, how to calculate gross margin? The amount of gross profit divided by amount of revenue into 100. You can use your calculator. They have computed 32,67,000 divided by 11,21,67,000 percentage, which is equal to 2.91. So revenue is used as a basis for calculating gross margin ratio, and same way gross margin is computed in second supermarket case also. So this was the very simple thing. The point number 2 of the question asks us to show the again operating income margin, but operating income margin we should show on the basis of activity based costing. Now for that purpose, very first I have taken gross margin from the previous calculation, and after gross margin the total overheads. Sir, what is the amount of total overheads? See here, total overheads are amounted to rupees 16,55,995. This 16,55,995 is divided into 2 parts by considering ABC technique. Sir, how this bifurcation is to be done? For this purpose they have prepared one statement. Okay, according to the statement, total store delivery cost. Now total store delivery cost per activity cost is computed first. Sir, how to calculate per activity cost? Try and understand. Total store delivery cost is 3,90,500, but this particular cost you have incurred on all the store deliveries. Now what are the total number of store deliveries given in the question? Sir, number of deliveries are 1,100 and number of deliveries are 2,850. If you take total 1,100 plus 2,805, this will give you 3,905 as amount. Correct? No? What was the total cost of first activity? Sir, first activity's cost was 3,90,500. You should divide it by using total number of your deliveries, and they are 3905. So this amount, when you are going to divide by 3905, you are going to get one answer. 390,500 divided by 3905 is equal to 100 rupees. Sir, what does that 100 rupees means? For one delivery, for one store delivery, you have incurred the cost of 100 rupees. If one delivery is costing you 100 rupees, then 1100 deliveries will cost you, 1100 deliveries will cost you 1,10,000, and 2805 deliveries will cost you 2,80,500. This is the cost computation which is done by using the same thing which we have just now discussed. Next activity. The next activity is cartons dispatched to store amounted to rupees 4,15,250. Correct? It should be divided by using total carton dispatched to a store per delivery. Correct? No? This is the basis which we have to consider. Now let's check carton dispatched to a store per delivery is given in the question or not. Yes, it is given. Average number of cartons shipped per store delivery is 250. 250 are not the total cartons shipped. They are the cartons which we have shipped for one delivery, and there are total 1100 deliveries available with us. Correct? No? So if one delivery consists 250 cartons for 100 and 1100 total deliveries, you are going to ship 2,75,000 cartons as far as first supermarket is concerned. And in second supermarket, this calculation will be 50 cartons per delivery multiplied by number of deliveries, that is 50 into 2805, so 140,250 cartons. Correct? Now if you want to calculate total cartons, sir, how to calculate total cartons? It's 140,250 plus 2,75,000. So total cartons required for all the deliveries are amounted to 4,15,250. Oh my God. 4,15,250 divided by 4,15,250. So you can analyze and conclude here 1 rupee is the cost needed for every dispatch. Correct? No. 1 rupee is the carton cost which is needed for every dispatch. Per delivery is going to cost you 1 rupee carton cost. Now carton cost is 1 rupee, and as far as first calculation is concerned, 275,000 cartons you have used, and as far as second calculation is concerned, 1,40,250 cartons you have used. If you check the calculation, you are going to get the same values here, 2,75,000 and 1,40,250. Done? Simply bifurcation. As far as your third calculation is concerned, let's see what is the third area of activity given. Shelf stocking at customer store. Total amount to be bifurcated is 64,845. It is to be divided on the basis of number of hours of shelf stocking. Whenever you are performing the stocking activity, how many number of hours you have consumed, that we need to ascertain first. Now shelf stocking hours are available, and again these hours are given according to per delivery. So first you should convert them in total by considering number of deliveries. When you compare them, when you convert them, 1100 into 6, so it is 6,600 number of hours required for all the delivery, and 2805 multiplied by 1.5, 4207.5. This many hours are required. So when you add up all these values, you are going to get 10807.5. Correct? No? 10807.5 is the calculated number of hours, and once this number of hours are available, you are going to compute the next thing. Now try and understand the next thing. Now these are the average number of hours of sales stocking per store delivery, and per store delivery 6 hours are given, 1.5 hours are given, and once you are going to multiply them with the number of deliveries, delivery wise number of hours you will be getting. Correct? Now delivery wise number of hours you will be getting, and what is the cost associated with this is given. If you check this, you are going to get the calculation here. Now total 64,845. You can check 64,845 is the total cost. When you divide this total cost by using 10807.5, you will be getting 6 rupees rate. Correct? 6 rupees is the hourly rate, correct? 6 rupees into 6600. Kindly calculate on Calci. 6 rupees into 6600, you are going to get 39,600 on your calculator, and 6 rupees multiply by this many hours. 6 rupees multiplied by 427.5 hours is 25,245 you will be getting, and the same amount is given. See how we are calculating. We are just taking total of cost and we are dividing it by the concern level of activity, concern given cost driver, concern basis. Basis is not given directly. We are calculating that basis, and cost per activity we have already discussed how they are computed. The next item which we are going to calculate, the next cost which is identified as line item ordering. Line item ordering is 3,45,000, and 3,45,000 is to be divided by using number of purchase orders, and number of purchase orders are given in the question. You can see number of purchase order is given in the question, and number of purchase order is 14 and 12. Average number of line item per order, again it is given per order. So it is 14 multiply by total line orders you need to calculate here. Number of line orders are available 770, and this is something very important. Student always gets confused with which element we should connect this data. Now try and understand what is given. Average number of line item per order. So if you want to take the total, you should multiply this 14 with the number of orders, and number of orders are 770. 40 into 770. So to fulfill all the orders, total 10,780 line items are needed. Correct? Same way, when you multiply these values, 12 into 1980, you are going to get 23,760. Ultimately, the total will be 34,540. Correct? What I have done? I have done simply multiplication of the given line items per order into number of orders, and I have computed the level of activity. 34,540 is the total. 34,540, when you divide it, you are going to get some value. 3,45,000 divided by 34,540, you will be getting something. Correct? Now total cost is computed. After that, customer purchase order processing cost is again calculated by using the same way. They have given total customer purchase order processing cost amounted to rupees 4,40,000, and purchase orders by customers is the basis which we have to consider. When you divide this 4,40,000 by using the customers processing orders total, that is 770 and 1980, which was given here, 770 and 1980. By adding this 770 and 1980, you are going to get total 2750 orders. Correct, no? Now, if you divide this 4,40,000 by 2750, you will be getting 160 per order rate. This is activity based costing rate, and this rate you are going to use for the purpose of calculating your apportionment of cost. Once your supermarket wise cost, activity based costs are apportioned supermarket wise, you can take total also. By adding up all these values, you are going to get the operating cost, and here is the breakup available with us. Sir, breakup of what? Breakup of the total overheads which are given in the question. They are 16,55,995. So your 16,55,995 are now bifurcated into two parts, and the same two amounts you have to put in your solution for GP calculation and net profit calculation. See here, the 16,55,995 is now divided into two parts, and they have computed the operating income. And now operating income they have divided by revenue and multiplied by 100 to get the percentage. So question was divided into two parts. What was the previous practice of the company? They used to evaluate their performance on the basis of gross profit ratio. What is the current practice of the company? They are using the ABC system for the purpose of apportionment of their operating cost. Operating cost is divided into 5 activities. So 5 rates we computed, and we have computed supermarket A and supermarket B's operating cost. So breakup is computed, and now company is going to ascertain the operating income margin. Operating income margin is your net operating profit, and net operating profit margin calculation can be done by dividing this profit amount by using your amount of net sale. So amount of your operating income 26 lakhs 11,400. When you divide it by using your total revenue 11 lakh 21,067,000, and when you convert it into percentage form, you are going to get one answer, fractional value, which is rounded off and written over here 2.33%, and same method is used for ascertaining the operating income margin for supermarket B. So this is the end of your ABC discussion. Let's start with the next chapter after this. So till now what we have completed? We completed with our material costing, where material related cost we have ascertained. We completed with our employee costing, where employee related overtime treatment we have calculated. After that, absorption costing, the huge chapter, we completed with 3 method. New method we discussed, trial and error, how to perform the calculation under that method, that is also done, and connected to absorption costing, one more chapter we have revised with RTP, and that is your activity based costing. Now let's start with the next chapter, which is given in RTP, and that chapter's name is your cost sheet, which is, you can say, backbone of your subject. Cost sheet, there is one format, the format you need to use, and according to the format you need to only substitute the given data, that's it. So nothing is new, only cost sheet format we'll be using. Let's have a detailed discussion of this particular chapter. So the question based on cost sheet, the very easiest question is covered in RTP. It will help you to revise each and every concept which we covered in cost sheet chapter. A Limited produces a single product X. They are not producing multiple products, they are producing a single product X. During the month of December 2021, the company has produced 14,560 tons of X. So this is the quantity produced given. The details for the month of December 2021 are as follows. For production of these many units which are given in the first paragraph, they have consumed some material, and material consumption we always record as raw material consumed. Simultaneously, I will show you the solution which is suggested by the institute. In this cost sheet, first item which is recorded by them is material consumed. This is your direct material, directly recorded in outer column. After this, power consumed is given 13,000 kilowatts at the rate of rupees 7 per kWh, and diesel consumed 1000 liters at the rate of rupees 93 per liter. So this both are the direct expenses for us. Whenever you are going to increase the number of hours, correct, no? Whenever you are going to increase the number of hours of your operation, your power consumption and diesel will increase. Your power and diesel consumption cost will reduce whenever you are operating your factory at lower hours. Sir, what does that mean? Whenever you are producing more quantity, this both the expenditure will increase accordingly. Whenever you are going to reduce the quantity, this both the expenditures will reduce accordingly. This both are the direct expenses, and they have recorded them before prime costs by simply multiplying the given elements. Now, next item is wages and salary and gratuity and leave encashment paid. Now, wages and salary is direct wages for us, and whatever fringe benefits if you are giving to your workers and employees, they will be treated under direct wages, like provident fund contribution, contribution to employee state insurance fund. So all the items, all are the benefits which you are giving to your workers are to be considered as wages, and that's why this both the amounts are added over here. If you check the total, before taking total, they have recorded one more expense, and that expense is given after this. Hiring charges paid for HEMM, heavy earth moving machine. Heavy earth moving machine you have purchased on higher basis, and higher charges you are paying as 13 lakh, and higher charges are always direct expenses for us. If you check this question, then till this particular point, all the items which are covered, they are generally recorded under the heading of your direct cost. So total of all these elements will give you prime cost, and prime cost is computed and given in your solution. So it is very simple. After prime cost, secondary cost starts. Secondary cost item number 1. Now here list of secondary cost items are given, where point number 7 says hiring charges paid for cars used for official purpose. So this is administration overhead, but it is general administration overhead for the company, because it is not related with the production. Reimbursement of diesel cost for the car, reimbursement of diesel card. If any of the personnel of your company is using his own car, then he will be claiming for the reimbursement of diesel charges, and company has paid this 20,000 amount towards reimbursement of diesel cost. So it is also administration overhead which is incurred for the general administrative purpose. The hiring charges of car attract GST under RCM. GST under RCM. Oh sir, RCM. What is the meaning of RCM? Your RCM is a reverse charge mechanism. Reverse charge mechanism. Sir, what is reverse charge mechanism? Your reverse charge mechanism means is the case where you won't be able to claim any credit. ITC is not available here. Sir, ITC is not available means what? It means you have to pay this 5%. So whenever you are hiring the cars, it attracts GST, and whenever it is available without credit, that means this is the extra expenditure which you need to incur, and this expense is also to be recorded under general administration overhead because it is related to the hiring of cars. If you are hiring the machinery hire charges are direct expenses, but car hire charges is administration expenditure. Point number 10. Maintenance cost paid for weighing bridge used for weighing of final goods at the time of dispatch, 7,000 rupees. 7,000 rupees is your maintenance cost, which is your selling overhead which we are using at the final stage. AMC, annual maintenance charges. Cost for CCTV installed in weighing bridge, again this bridge related item, and factory premises is 6,000 and 18,000 per month respectively. So 6,000 rupees is your selling overhead, whereas 18,000 rupees amount is available with us. This 18,000 amount is related to your factory premises, and this factory premises amount we should record it under factory overhead. It is pretty clearly given. Now TA and DA, sir, what is that? Traveling allowance and dearness allowance, and hotel bill paid for sales manager is given. Whatever expense you are incurring for selling activity, whatever expenses you are incurring for sales manager, sales personnel, sales representative. Now these all representative related expenses we are going to record under selling overheads, and this is something given in the question. Point number 13, the company has 180 employees, works for 26 days in a month. Now each worker is going to work for 26 days, and in all 180 employees are there with company. So there will be total 4680 man days available with company. Sir, what is the meaning of man days? If all men, 180 men are going to work for 26 days, then how many productive days are to be worked? That is what I have computed by simply multiplying the same. Sir, what is the use of this? Let's see. Point number 1 says prepare cost sheet for the month of December. Monthly cost sheet we need to prepare by putting all the relative amounts. Compute the earning per man shift, that is EMS, and output per man shift for the month of December 2021. So whatever cost we are going to incur, that cost we will be dividing by total man shift, that is man days. So we are going to get the per man day man shift earning, as well as output we need to express by using the same parameter. See here. Now till prime cost, everything we have discussed. After prime cost, if you remember the cost sheet format, the next item which we record is your factory related expenses, and factory related expenses is available with us. Factory related expenses are 18,000 rupees. Done. Now 18,000 rupees are recorded here. See, after prime cost they have recorded 18,000 rupees. Yes, after adjusting factory related expenditure you are going to get total, and that total is generally called as gross factory cost. But as opening stock of WIP, closing stock of WIP is not available with us, your gross factory cost and net factory cost, works cost is same. After work cost, if you remember guys, we record 5 elements. They are research and development cost, not given. Quality control cost, not given. Administration overhead related to production, not given in the question. Primary packing cost, not given. Sale of scrap is not given. Hence your factory cost and cost of production is same. After cost of production, we add opening stock of finished goods, we deduct closing stock of finished goods. They are also not given. That's why your cost of production and COGS both are same. And after COGS, all remaining expenses which are related with administration general as well as your selling and distribution you need to record. So if you check all the expenses which we have marked as your administration, selling, these all expenses they have recorded in the systematic order, and finally TA, DA is also recorded. After recording everything, they have computed the total cost. Your total cost is also called as cost of sales, and this cost of sales is given. Question point number A is asking us to show the total cost or total benefits or total earnings on the basis of per man shift. So for calculating earning per man shift, very first you should calculate the total employee benefit paid. Total employee benefit paid are two. We have paid them wages, we have paid them gratuity and leave encashment. So both the values are added here. Total labor cost, total wage cost is divided by using your man days, which is 4680, which we computed while discussing the question. You can see here already this computation is done in the second part of the discussion, which is given below the cost sheet. See, 180 employees into 26 days, when you multiply them you got this 4680 value. If employee cost you are recording with this, you are going to get EMS, that is earning per man shift. And if you want to express your output, what is the total output produced by the company? Read the first line of the question please. Now first paragraph says 14,560 tons products are produced, and if you want to express them according to man shift, you need to divide them by man shift. You are going to get your answer. This was the easiest question of cost sheet, covering various new points which we have analyzed and posted according to our format. So this is the end of cost sheet, guys. Let's start with the next chapter without wasting time. Till now 5 chapters we have revised. Now after that the very huge, very lengthy chapter comes, and that is your cost accounting system, where 2 accounting systems are there. Let me give you the basic theme of this chapter. The first accounting system is called as integrated accounting system, and second accounting system is called as non-integrated accounting system. Sir, how to identify and how to know whether integrated and non-integrated concepts are covered? See guys, when cost records and financial records are maintained separately by any of the organization, that means they are not merged, they are kept separately, they are recorded separately, means they are not integrated. This is the system which is called as non-integrated, and the biggest indicator to identify the question whether it is based on integrated or non-integrated is GLC, General Ledger Control, which can also be called as cost ledger control account. And cost ledger control account, whenever it is given in the question, that clearly means that the given question is based on non-integrated accounting system, and to identify that you should always check cost ledger control. Instead of cost ledger control, if in your question bank balance, debtor balance, creditor balance, this kind of items are given, then that will be the sum based on integrated. And integrated means when both the sets of accounts are merged together. They are not prepared separately, they are not maintained separately. Company have merged them and they are following integrated system. The RTP covers non-integrated accounting system. Lots of journal entries are there. Now if you remember the chapter, total 27 journal entries deals with this particular thing, this particular chapter, non-integrated accounting. But almost if you check the entries format, that format is nothing but replica, repetition is there in each and every journal entry. Let's have a discussion of this. The similar question is there in J.K. Shah classes textbook. Each and everything is same, only amounts are different. The similar question is there in J.K. Shah classes textbook. I guess according to the numbering which is given in your textbook, this one is question number 3 of your non-integrated accounting systems. Check, you can check your textbook. In May 22 textbook of cost and management accounting of J.K. Shah classes, same category of question is covered. So as far as understanding perception is concerned, you people can easily understand this particular question as it is already covered in the classwork. Let's have a discussion. X Limited maintain a non-integrated accounting system for the purpose of management information. The following are the data related with year 2021 and 22, where very first opening balances are available. Opening balances are available for multiple accounts, where first opening balance is a store ledger control account, which is to be recorded on the debit side of SLC account. Work in progress control account to be recorded on the debit side of SLC account, and finished goods control account should also be recorded on the debit side of this account, because these all are the stock accounts, and stock account are always carry debit balance. Building construction, this is called as capital WIP. Your asset construction is going on, and whenever your asset is getting constructed, it will be showing you the debit balance because it is asset related account. And ultimately, to adjust all these four figures, you have cost ledger control account with you, which will show always opening credit balance. So you can even cross check. If you add first four value, you will be getting 3,24,000 as your total, which will be tallying with your cost ledger control account. Other than opening balances, they have given some transactions. If you check the transactions, the first transactions which are given, they are related to material. Now, very first transaction is for material purchased, and material purchase we pass entries SLC account debit to GLC, that is store ledger control account debit to general ledger control. In the suggested solution, you can check the effect. The first effect of this 24,000 rupees is to be given on the debit side of store ledger control, and second effect is to be given on the credit side of GLC, which can also be called as cost ledger control. Some material you have issued and issued. Total material is issued at three different places. The place where you are transferring the material is WIP, that is production. The place where you are transferring the material is general maintenance, and maintenance department is factory department. And the material you have transferred to building construction. So building construction, the department will get debited. Whenever you are transferring your material to any department, journal entry for that is department account debit, department account debit, department account debit to what we are transferring. We are transferring your store, we are transferring your material, material is going out, that's why to SLC is the entry. Accordingly, you need to give the effect. First effect, on the debit side of all three accounts you should give WIP debit side to SLC, factory overhead debit side to SLC, and building construction debit side to SLC, whereas store ledger control will contain three effects on the credit side for this transaction. After material, wages related information is given, where question specifically says that gross wages paid by the company are 90,000. So for this 90,000, you should pass only one entry, and that entry is wages account debit to GLC, as all category of wages, whenever we are paying off, cash is going out, and wage account we are going to debit because it is an expenditure for the company. So wages account debit to GLC is the entry for this 90,000. But guys, there is one hidden adjustment. Out of this 90,000, 24,000 is indirect wages, 6,000 is your wages paid for building construction. There are further 60,000 rupees which are not mentioned anywhere in the question. Sir, how you computed those 60,000 rupees? What is the total amount of wages paid? 90,000. Out of 90,000 rupees, 24,000 first I deducted towards indirect wages. Then I deducted 6,000 towards my building construction wages. That means 60,000 is your direct wages amount. Sir, why you have computed them? Whenever you are dealing with any of the expenditure in this particular chapter, you should pass two entries. Sir, which two entries? Absorption and payment. Payment entry is already passed. Absorption entries are pending. Sir, what are the absorption entries? As far as indirect wages are concerned, your absorption entry is factory overhead account debit to wages. As far as building construction wages are concerned, you should pass entry of building construction account debit to wages, and direct wages absorption entry is WIP account debit to wages. These three absorption entries you should pass systematically, and that's why direct wages hidden adjustment I have already computed and discussed with you all. So out of 90,000, three wages are there. For all of them, you should pass absorb entry as well as payment entry. Payment entry is same for all the categories of wages, but absorption entries are different. Please check all the effects of these entries in your suggested answer. First effect, FOH account debit, that is factory overhead ledger control account debit, will contain to wages. Building construction debit side will contain to wages, WIP ledger control will contain to wages, and wage account will contain by FOH, by building construction, and by WIP on the credit side of wage account. After wages, factory overheads are given, and this is very important. Repetition is going on. The sum question, guys, you have solved in class from the classwork section. Question number 3. Actual amount incurred towards wages is towards factory overheads is 96,000, and entry for this is factory overheads account debit to GLC as you are paying off the amount. Now, whenever you are passing entry for any of the item, or for any of the expense from the cost sheet, you should pass payment entry, which is already been passed, FOH account debit to GLC. But one more entry is needed, and that entry is absorption entry, and absorption amount is not given anywhere in the question. This amount you are going to get from the FOH account whenever you are going to close this. Once FOH account is closed, you will be getting absorption amount, and from their absorption entry you should pass. Now, some overheads you have absorbed in building construction, and building construction absorption overhead effect and entry which we pass is building construction account debit to FOH. Under absorption entry we pass is costing P&L account debit to FOH, and the balance entry is absorption of factory overhead, which is WIP account debit to FOH, and this transaction is missing from this question, which you are going to get from your FOH account. Whenever you are going to close your FOH account, balancing figure you should transfer to WIP account. Sir, what? Whenever you are going to close your FOH account, factory overhead account, in that case, balancing figure of factory overhead account you should transfer to WIP ledger control account. This balancing figure you are going to get whenever you are going to close the account. Royalty paid is the direct expense. For direct expense, first absorption entry will come, WIP account debit to royalty, and once absorption entry is passed, you should pass second entry for payment, and that one is royalty account debit to GLC. These are the entries to be passed for royalty. Selling and administration overhead, sir, nothing is given, so you should consider that absorption and payment is taken place at same amount. Now, absorption entry for selling overhead is cost of sales account debit to selling overhead, and payment entry is selling overhead account debit to GLC. These entries you should pass systematically. And finally, sales realization entry is given, and entry for this transaction is GLC account debit to sales account. So, you should record all these elements systematically, but beyond this, some additional and important information is also given after this table. That particular information says that at the end of the year, the stock of raw material and work in progress amounted to rupees 33 lakhs and 15 lakhs respectively. 33 lakhs and 15 lakhs respectively. These values are nothing but closing of SLC and closing of WIP. These values are given in the question. Done. So, whenever you close SLC account, you are not going to get the closing balance. SLC account balancing figure is to be transferred to FOH account. Sir, why? We are going to consider that as a normal loss, and it is mentioned in the question. The loss arising in the raw material account, means SLC account, store ledger control account, is treated as factory overhead. So, this balance is to be transferred to factory overhead. Then, if you are going to close your WIP account, WIP closing balance is given. Generally, by closing the accounts, we get the closing balances, but here closing balances are given. That's why WIP account balancing figure will give you finished goods produced transaction. You should record finished goods whenever balancing figure you will be getting in your WIP account. The building under construction was completed during the year. Building under construction was completed during the year, which means you are not allowed to carry forward the balance of building construction account. Building construction account balance is to be transferred to your cost ledger control, general ledger control account, because it is specifically mentioned that it got completed during the year. Now, very important and last transaction of the question says that the gross profit margin is 20% on sale. Gross profit margin is 20% on sale. See here, have you ever noticed this particular calculation? Your sales minus COGS is equal to gross profit, correct? Your gross profit margin is 20% of sales. That means whenever selling price is 100 rupees, you are getting 20 rupees as your gross profit, which means 80 rupees is your COGS. Out of these three amount, sales amount is available with us, and that is 2,70,000, correct? If sales is amounted to rupees 2,70,000, we can easily compute our COGS by cross multiplying the same. 2,70,000 into 80 divided by 100 is equal to 2,16,000, and 2,16,000 is my COGS, which stands for goods sold at cost, and goods sold at cost journal entry is cost of sales account debit to finished goods account. Cost of sales account debit to finished goods account. This is the one more hidden adjustment. You can cross verify. Cost of sales account debit to finished goods account 2,16,000. See, finished goods account credit side 2,16,000. Same thing is given, and that is the hidden adjustment. So total 3 hidden adjustments are there. Hidden adjustment number 1 was direct expense amount. That is direct wages amount, which we computed. Hidden adjustment number 2, absorption of fixed overhead, factory overhead, you will be getting from WIP account. Next missing balance, finished goods produce, you are going to get from WIP account, and finished goods sold transaction is also missing, which we have computed with the help of 20% of sales gross profit margin. So by using this particular information, question is asking us to prepare relevant accounts to record the above transaction in the cost ledger control of the company, and this is the end of this particular discussion. Whenever guys you are going to get 30 to 45 minutes time, please remove 30 to 45 minutes from your busiest schedule and prepare all the necessary accounts, or even you can refer all these journal entries which I have recorded here, and you can only cross check the double effects, whether these effects and these amounts are appearing in the suggested answer or not, that you need to check. So this sum you are going to practice before examination for sure. So this is the lengthy and a huge chapter as far as your exam is concerned, which is going to consume maximum time of yours. So after this, let's start with the next easiest part of batch costing. Now batch costing chapter covers only and only one concept, that is economic batch quantity, which is the replica of your economic order quantity. Sir, what is economic order quantity? Hope you remember in material costing, the one problem which we faced, that is controlling of carrying cost and controlling and ordering cost. Ordering cost and carrying cost were inversely related to each other, correct, no? To stabilize them, we introduced, that Professor Wilson introduced EOQ formula, and by using EOQ formula, we used to stabilize both of them, like carrying cost and ordering cost we used to stabilize. Same replica is there in the batch costing, where we are going to stabilize the setup cost of the production and carrying cost of the production. For this purpose, you should use formula of 2 into annual production into setup cost divided by carrying cost. The same formula will be using. Let's see what all information is given. Prostem Limited manufactures stent that is used by hospitals in angioplasty, a procedure used to open blocked coronary arteries without open heart surgery. So some medical terms are given. We people are commerce people, and medical terms we can't read properly, no. As per the estimates provided by Pharmaceutical Industry Bureau, there will be a demand of 1 crore stents in the coming year. There will be a demand of how many stents? 1 crore. So this many stents we need to produce first. Now Prostem Limited is having market share of 10% of the total market demand of the stent. So 1 crore is the given overall market stents demand, and out of that, this particular company is having 100% market share. No, they are not having monopoly. They are having perfect competition which is going on in the market, and according to perfect competition feature, this particular company is having only and only 10% of the total market share. Sir, what is the meaning of that 10% of market share? That means they are not going to produce entire 1 crore, they will be producing 10% of 1 crore. And if you calculate 10% of 1 crore, your annual production will come to 10 lakhs units of the required product. So this is something new. 1 crore figure is given. Student sometimes takes directly 1 crore as a production, annual production, but that is possible with 100% market share. This company is having only 10% market share. That's why we are considering only 10 lakhs as our estimated production. It is estimated that it costs 3 rupees as inventory holding cost per stand per month. This is per month. We should always express inventory carrying cost, holding cost on annual basis, and for that purpose this 3 you should multiply by 12. 12 into 3 is equal to 36, and this is the carrying cost which we are going to put in our formula. And that the setup cost per run of stent manufacture is 450. Setup cost is given. Formula is available with us. In this formula, you need to substitute the figure. Let's see how to substitute the figure. So here 2 into 10 lakhs into 450 will come in numerator, divided by 36. Please kindly use your calci. It will be 2 into 10 lakhs into 450 divided by 36. When you calculate square root of this, you are going to get the EBQ ka quantity. It is 2 into 10 lakhs into 450 divided by 36 rupees under root. You are going to get 5000 stents as your answer. And if you check the given solution, in the given solution they have already computed this and they have calculated the answer of 5000 unit stent. Sir, what does it mean? It means whenever company is going to produce the entire requirement of 10 lakhs, they will be performing production in a batch size of 5000 units. They will be producing 5000, they are going to again set up the machinery. Again they will be producing 5000, again machinery will set up. Then again 5000, again set up 5000. So 5000 is called as batch size, where cost can be minimized. Question in part number 2, they are asking us to calculate the minimum inventory holding cost, and hope you remember holding cost we used to calculate by taking average inventory quantity multiply by carrying cost. We have computed quantity as 5000 divided by 2 into carrying cost is 36. If you compute, you are going to get 90,000 is the answer. And according to this, the two things which are asked in the question, those all the things we have computed. But if you check the suggested answer, they have given you the one more calculation which was not asked in the question. But suppose if this kind of extra cost calculation is asked in the question, how to do that? What is the current run size that is needed for that? Current run size is not given anywhere in the question. You can see in the question itself, current run size is not given. Suppose point number 3 says if the current run size is 6000 stents and the computed run size is 5000 stents. In this case, if you want to calculate setup cost, your setup cost is annual production divided by quantity multiply by setup cost. My annual production is 10 lakhs. Yes, it should be divided by the required quantity or per batch quantity. Company's policy says 6000 produces and our EBQ policy says you should produce 5000. Accordingly, we have computed these values by multiplying with 450. Whenever you are calculating carrying cost, it's Q divided by 2 into your carrying cost, which is CI. Your quantity is 6000 divided by 2 into 36, and 5000 divided by 2 into 36, you are going to get this cost. And according to this, when you compare this at EBQ level, see your cost is getting reduced by 3000. Under normal circumstances, the cost which is required when batch size, when run size is 6000 units is 1,83,000. When this particular run size is not followed, instead of that you are going to take EBQ into consideration, you can save 3000 rupees. So sometime extra cost computation can also be asked in the examination. So guys, please revise this thing. This is the replica of EOQ concept from the material chapter which is covered in the batch costing. And immediately after this, let's start with the next concept of your job costing, which is covered in the next question number 8. Let's continue with job costing. Now, batch costing and job costing are the chapters which can be treated as continuation to your cost sheet chapter. Because no new concepts are there, only similar category of calculations are covered in this all the chapters. So let's have a discussion of question number 8, which is covered in RTP. KG Motors Limited is manufacturer of auto components. Following are the details of expenses for the year 2020 and 21. Opening stock of raw material is given. Opening stock of raw material is to be added to RMC. Closing stock of raw material is to be deducted from RMC, and purchase of raw material is to be added to RMC. The total of these three elements will give you raw material consumed. Direct labor is your direct wages, factory overheads are given and administration overheads are also available. Now this is the information for the entire year of entire company. This is not something related to one, you can say, particular job. Company may undertake various jobs. Out of them, all the jobs related information is covered in the first table. So this is the whole information related to the company. During the financial year 2021 and 22, they are talking about the estimations. The company has received an order from a car manufacturer where it is estimated that cost of material and labor will be 80 lakhs rupees and 40 lakhs 50,000 respectively. So the given cost of material consumption and the cost of labor is related to a particular car manufacturing job. The company charges factory overhead as a percentage of direct labor, so absorption rate can be computed for factory overhead as a percentage of direct labor, and for that we should use the formula of factory overheads divided by direct labor, that is direct wages, into 100, and administrative overhead absorption rate is to be expressed as a percentage to factory cost. Means for calculating the absorption rate of administration overhead, you should divide them by using factory cost, then you need to multiply them by 100. So for the purpose of calculating two absorption rate, the first figure needed is factory overhead, and factory overheads are available with us. They are 30 lakhs 80,000. They are to be divided by direct wages, and direct wages amount is 90 lakh 50,000. Now when you solve this, you are going to get some percentages. 30 lakh 80,000 divided by 90 lakh 50,000. It will give you some 34 point something percent amount. So exactly 34% rounded off figure you can take here. Now what does this 34% means? Your factory overheads will be computed as and when required. Your factory overheads will be computed at 34%, but at 34% of what? Direct labor of a particular job. Then administration overheads as a percentage of factory cost. My administrative overheads of company are 20 lakh 50,400. But for calculating this particular calculation, for completing this computation, we need one more figure, and that is of factory cost. Sir, how to calculate factory cost? Factory cost is equal to raw material consumed plus direct wages plus factory overhead. When you add these three values, you are going to get your factory cost. Let's check this. 15 lakhs to be added, 20 lakhs to be deducted, 1 crore 80 lakh 50,000 to be added, then direct labor 90 lakh 50,000 to be added, and factory overhead 30 lakh 80,000 to be added. So in all 2 crores 96 lakhs 80,000 is the amount of factory cost which is given in the question. So it will be 205044 divided by 2 crores 96 lakhs 80,000 into 100. You are going to get 6 point something like 6.91% rounded off figure. This is the figure showing administration overhead charge rate, absorption rate, recovery rate or application rate, which is to be computed as a percentage of factory cost. So two rates we have first computed in a working. If you check the given solution by the institute, they have computed first factory overhead recovery rate, which is 34% of labor. The same thing we have done. And administration overhead recovery rate is computed as 6.91% of factory cost. They have shown the factory cost calculation separately. Now as far as this particular job is concerned, the cost of delivery of component is given, and that is your selling overhead 9,50,000. We are required to calculate the recovery rates. We have already computed. We are required to prepare the job cost sheet where price is to be quoted if the desired profit is 25% of sales is given. Whenever you are preparing any cost sheet, your job related cost sheet will start with material item which is given, labor cost is also given, factory overheads we have computed, they are 34% of the labor cost, it is also computed, and by adding up all these three amounts you are going to get the factory cost figure. After computation of factory cost, administration overhead we add according to the cost sheet format. They are 6.91% of the 1 crore 34 lakhs 27,000 factory cost. They will give you total cost of production. In that you are going to add the cost of delivery, it is the selling and distribution overhead. Ultimately you will be getting the total cost. Simply addition, nothing else. Only two important points: factory overhead and administration overhead absorption rate computation. Those computation we have already performed. We have computed the rates easily. You can complete with the cost sheet. As per given information, your profit is 25% on sales. That means when sales is 100, profit is 25%. That means your cost is 75%. Simply you need to cross multiply. Ultimately you will be getting the profit, and by adding profit to the cost, finally you are going to get the sales value, and the total sales value to be quoted is computed, which came to 2,04,06,408. This is the easiest and simple question, carries weightage up to 8 marks from exam point of view. So this is the end of job costing. After job costing, in the continuation, process costing related information is given. Now as far as your process costing related information is given, now similar type of question is covered in JKSC textbook. Sir, which question in JKSC textbook? JKSC textbook revision question number 1, which is there on page number 92. If you check JKSC textbook, same question is printed over there, only with different amounts. Same accounting treatment, same quantity. If you check, these all quantities are same, but these values are only different. So only you need to practice the same question which is covered in the revision of your textbook to understand and solve this particular question. Nothing is new, nothing is not new. That's why we are not going to spend much of time on this question, as it is already solved in JKSC textbook. Let's start with the question number 10, which is related to the service costing, and service costing is also called as operating costing. This is the second name of this particular chapter. Now sum which is given in this particular chapter carries weightage of approximately 10 marks, where CNG car and electric vehicle information is available. Let's have a discussion about this particular question number 10. So in question number 10 of your RTP, the information which is covered is related with CNG car and electric vehicle, that is your EV car. Navya LMV Private Limited operates cab, that is car rental services in Delhi NCR. It provides its services to the offices of Noida, Gurgaon and Faridabad. At present, it operates CNG fueled cars, but it is also considering to upgrade this into electric vehicle, which is new generation car. After that, the details related with the owning of CNG and EV propelled cars are as tabulated below. Now details related to CNG car and EV cars are available with us. Very first, car purchase price is given. This is nothing but cost of car purchase. While purchasing the car, sometime government gives you subsidy. So because of subsidy given by the government, your car price gets reduced. So this subsidy is only available on electric vehicles. Life of car is given. If you observe this data, by using this, you can easily calculate depreciation related to each of the car. Then residual value is given. Residual value is the scrap value, which is to be computed from the cost while calculating depreciation. Each car's mileage is also available. It's 20 km per kilogram of your CNG, and it's 240 km per charge. Electricity consumption per full charge is given 30 kWh. CNG cost is given, power cost is given, annual maintenance cost, annual insurance cost is also available, tire replacement cost in every 5 years is also given, and battery replacement cost is also there. Apart from the above, the following are the additional information, where average distance covered by a car in a month is given. Few informations are given on annual basis, but if you check this information, it is given on monthly basis. Driver salary is also given on monthly basis. Garage rent per car is also available on monthly basis, and share office and administration cost per car is also available 1,500. These are the administration overheads allocated to the car. We are required to calculate the operating cost of vehicle per month per car for both CNG and EV options. For both the options, they have asked us to calculate cost per vehicle per month. right? So on the basis of the given information, if you check the given answer, they have prepared few working notes, where very first working note is prepared for your depreciation calculation. For the purpose of calculating depreciation, very first they have recorded cost of the asset. From that cost, they have deducted first government subsidy, and then they have deducted scrap value, that is your residual value. This will give you net cost. And once this net cost is available, you have to divide this by using life of the car. So depreciable value is divided by life of the car, and once this calculation is done, you are going to get the annual depreciation. When you divide this depreciation value, which is computed on annual basis, by 12, you are going to get the depreciation per month, as monthly cost is asked. So first depreciation is computed, and in the statement of overall cost, they have first recorded the depreciation value under your fixed expenses. You can check them. Depreciation according to working note number 1 is amounted to rupees 4583.33 and 10,000 rupees. Done. After that, if you check the working note number 2, which is given by them, is related to the fuel and electricity consumption. Your CNG is going to consume fuel of CNG, and EV car is going to consume the electricity. Average distance covered in a month is already given in the question. Question says on an average your car covers 1500 kilometers distance in a month. So 1500 is recorded in both the column. What is the mileage given? Mileage information is also available with us. Per kilogram of CNG gives you 20 kilometer mileage, and per charge give you 240 kilometers mileage. So mileages are recorded. Now distance and mileages are recorded when you divide this both the datas, like 1500 divided by 20 and 1500 divided by 240, you are going to get the quantity required of the fuel. So fuel quantity required according to the given mileage is 75 kg as far as CNG is concerned, and 6.25 rupees per charge of your fuel, that is electricity which you are going to consume is given in the question. You can check that CNG cost is given according to per kg, so nothing is hidden in that. But if you check the power or electricity cost which you are going to incur, that is given 7.60, and this is given for 30. See, electricity consumption per full charge is 30 kilowatt. So your electricity you are consuming for one charge is 30 kWh. Then for the purpose of given data, we have computed the electricity consumption, that is your 30 multiplied by 6.25 will give you 187.5. Hope you got this. 30 kWh per charge. So number of charges required is 6.25. This will give you total electricity consumption of 187. Done. Now cost is given. So when you multiply this 60 with the required kilograms of your CNG, you are going to get 4,500 as cost of CNG per month. And cost is given 7.60 per kWh. Then for 187.5 kWh, according to 7.6, you will be incurring this much cost, and this cost you will be incurring for running of your car. And that's why if you check this statement covers this fuel cost in the running heading, that is running cost, which is related to fuel power, is recorded. After that, if you check the third working note, they have given amortization cost of the tire replacement. The life of vehicle is already mentioned in the question. The life of vehicle, if you check in the question, CNG car's life is given as 15 years and EV car's life is given as 10 years. So we have considered first life of the vehicle 15 years and 10 years. Now how many times replacement of tire is required? So required duration is given. Replacement duration is given. Tire replacement cost you are going to incur after every 5 years, means whenever you are purchasing the car, once 5 years are completed, you will be incurring the cost. Then after completing the 10th year, you will be incurring the cost, and after completing 15th year, the next period you are going to incur the cost, right? So during the 15 years time, you will be replacing your tire for 2 times. Generally mistake happens here. Generally student think 5 years is the interval, so 3 times we are going to change the tire. Why to change tire in last year when your life is getting over? Correct? No. If estimated life of your car is 15 years, third time you need not to replace the tire, because your car is going to get scrap value at that particular time. And that is why only 2 times replacement is required. And according to the same logic, electric vehicle car tire replacement is required only once in a lifetime, because at the 10th year end, your car is going to get scrap value. That's why this one time is required. So first we computed number of time replacement is required. We are multiplying the same with the replacement cost, which is given in the question. So total cost is computed, but this is total cost per annum again. No? If you are amortizing them, you should divide them by 12. Correct? No? First you should divide them by life. This is the entire life's cost. If you divide them by using their life, then lifetime charge we are converted on the yearly charge, and yearly charge when you are dividing by 12, you are going to get this respective value. So what we are doing, first we completed with the calculation of number of replacement required. According to them, we computed overall life's cost. Right, 32,000 and 16,000 is the cost which we are going to incur for entire 15 years and 10 years of the asset's life. We divided them by the respective life. We calculated the amortized cost per year, and when you divide that by using number of months, you will be getting the monthly cost, and amortization expense is also recorded in your solution. You can see amortization expenses is recorded under maintenance cost. So annual amortization expense we have converted into monthly expenditure. Done. Then if you check the next working note, in working note number 4, same working is done for the battery replacement, and they have computed the battery replacement cost by using the same concept, same parameter. Battery replacement cost is also recorded in your maintenance cost, because it is also required for maintaining the vehicle's battery. If you check the next working note which is prepared after this, working note number 3 is done, working note number 4 we discuss. After that, operating cost we have recorded. See here. Now if you check the main solution, running cost includes only fuel cost, maintenance cost includes very first annual maintenance and annual insurance cost, which is directly given in the question. You can see annual maintenance, annual insurance, you should divide this cost elements by 12. Ultimately you are going to get the per month cost. They are recorded here. This will give you total of maintenance cost, and under fixed cost, depreciation we have already shown, driver wages, garage rent, and share of office and administration cost we are going to record as it is, because it is given on monthly basis only. See, same amounts are substituted here, and after recording them, operating cost per month is calculated. What exactly question is asking us to calculate? Question, you can see last line, question is asking us to calculate operating cost per vehicle per month. That is per month, per car we need to show. So that is what we have shown here. Per month cost is computed, and this cost we have computed on the basis of one car each. Every one car will cost you total 36,627 and 43,708 approximate amount. So this one is the operating cost which we have calculated, and this is the end of your service costing question. Now, like service costing, there is one more important, very important chapter is covered in your syllabus, which is called as standard costing. Hope you remember. There are multiple variances covered in the standard costing chapter, which covers material variances, labor variances, variable overhead variances, fixed overhead variances, sales variances, everything is covered. But in RTP, the question given from the standard costing chapter covers only and only labor related variances, and this question is important from exam point of view. Please pay attention. The standard output of a product D, company is producing D product, is 50 units per hour, means in an hour you can produce 50 units. This is what standard says. In a manufacturing department of a company employing 100 workers, in a 40 hours week, the department produce 1920 units of product D. This is the actual production and actual hours given. So this is the actual output. Your given standard is only for 50 units, but actually company has produced 1920 units of a product, despite 5% of the time paid was lost due to abnormal reasons. So this is your abnormal idle time. The hourly wage rate actually paid were 12.40, 12 rupees and 11.40 respectively to group A, consisting 10 workers, Group B consisting 30 workers, Group C consisting 60 workers. So workers gang is given, labor force engaged is given, and they have bifurcated the same into 3 parts. The standard wage rate per labor is same for all the worker, wage rate is same for all the categories. Labor efficiency variance is given, and that is 480 favorable. By using the same information, question is asking us to calculate the labor cost variance, labor rate variance, labor yield variance, labor idle time variance, and the new point which is covered here is labor gang variance. Now for calculation of this, we should prepare one table first. Sir, which table we are going to prepare? Table or statement showing the standard data and the actual data. But if you check the suggested answer, they haven't given any kind of table. See here, some working notes are given. When 100 workers work for 1 hour, the standard output is 50 units. This is what given in the question, right? No, that means standard man hours per unit hours are computed. That means 100 workers, if they are working, they are going to produce your 50 unit. That means for 1 unit, how many hours are required? So 2 hours is the computed figure. For production of one particular unit, 2 hours is the standard time required, correct? Now standard man hours, if you want to calculate for actual production, your actual production is 1920 units according to 2 hours each, total 3840 hours is the required time, correct? No? Now they have categorized all the workers into 3 parts, worker A, worker B and worker C. Number of workers they have given in the question, correct? Total number of workers employed with work company, it is also available with us, and actual hours paid for is also given in the question. If you check the number of hours, you can get here actual number of hours total are 4000, and this 4000 hours are bifurcated according to the given ratio. So some students get confused in this particular point. They ask me, sir, how these hours are computed? What are the actual hourly hours available with this particular company? Actually, all the workers are going to work for 40 hours a week, correct? No? So if 10 workers are going to work for 40 hours, they will be total altogether working for 400 hours. 30 workers are going to work for 40 hours each week. So total productive hours contributed by all these workers categories 1200 hours, and here also when you multiply by 40, you are going to get 2400 hours. This is how actual hours paid for are calculated. Amounts are also calculated because these are the actual rates, and these rates are given in the question. Along with this rate, standard hours are also given, and standard hours are 5%. Sir, 5% of what? Of actual hours. So actual hours are 400 into 5%, 20 hours loss. So actually number of hours work are 380. Sir, how calculated? 400 minus 20 gives you 380. 1200 minus 60 gives you 1140, and 2400 minus 120 gives you 2280. So this table is giving you the information about the actual stuff which has happened. Now whenever you are calculating the wage rates and efficiency variances and all, your labor efficiency variance formula says you should compare efficiency by comparing standard hours with actual hours, and then you should multiply them by standard rate. Your actual hours and standard hours are available with us. Sir, actual hours, we have just now computed the actual hours which are available with us, and actual hours total are 3800 correct? Net hours they have taken for the purpose of computation. You should compare them with the standard hours, and standard comparable hours we have already calculated. They are 3840 hours. You should substitute here 3840, and you should multiply them with the standard rate. Sir, standard rate is not given. That's what we need to compute, because labor efficiency variance answer is given in the question. Your labor efficiency variance is 480 favorable. So that is 480 positive. Now you can solve this easily. Now 3840 minus 3800, your equation will look like this. 480 is equal to 40 into standard rate, and therefore your standard rate will be 480 divided by 40. 480 divided by 40, you are going to get your standard rate as 12, which is given here in calculation. Now once this standard rate is available, easily you can calculate total cost variance, and total labor cost variance is equal to standard cost minus actual cost. Your standard cost is standard hours into standard rate, standard hours computed, standard rate computed. We can take here total, and from that total you need to deduct the actual amount of your labor cost, which we have computed over here. 46,720 is the amount which we have paid to the laborers. So from standard, when you are going to deduct the actual amount, you will be getting your total cost variance. Once labor cost variance is calculated, question is asking us to calculate labor rate variance, and labor rate variance is equal to standard rate minus actual rate multiplied by actual hours. Correct? No? Standard rate is 12, 12, 12. Actual rates are given in the question. You can check them. It is 12.40, 12 rupees and 11.40. You should multiply them with the actual hours before considering idle time. And before considering idle time, the actual hours which are given in the question are 400, 1200 and 2400. They have done the same calculation and they have computed the labor rate variance. The new point is very important, and that the labor gang variance. Sir, what is the meaning of labor gang? Now try and understand, student. Labor gang variance can only and only be computed when there is a variation in the proportion of worker, in the composition of worker. Whenever there is a labor turnover, in that case only labor gang variance will come. Now according to the given information, see what is given here. Total actual time worked into average standard rate per hour of standard gang minus average standard rate per hour of actual gang on the basis of the standard hours. They are confusing you. In short, what we need to do, we need to do only one thing. First, you should check, is there any variation in the number of worker given? No. As per given information, they say is 10 workers, then 60 workers and 30 workers, overall 100 workers are working. So what we assume, we have set our standard according to 100 workers, we have recorded our actual according to 100 workers. There is not at all a variance between your actual number of workers and standard number of workers. When there is no difference in the number of worker, which means there is no variance, and it is clearly mentioned in the question that there is no labor gang variance, so it is 0. It has to be 0. For calculating labor yield variance and idle time variance, now very first thing, they have taken total standard hours, they have taken total actual hours, and they simply multiplied the same with the standard rate. They haven't taken any revised standard because your number of workers and number of input hours are not getting changed. So it is 480 favorable only. And finally, labor hour idle time variance is simply calculated by considering total number of idle hours. Sir, from where they have taken this total number of idle hour? From working note number 1. You can check the table. Now here idle hours are recorded separately, and by adding up all the idle hours, we have taken 200 rupees as the total of idle hours, 200 hours, and this 200 hours you should multiply with the standard rate so that you can get the answer, and this is the end of your standard costing. So overall same question they have given. This kind of question we also solved in J.K. Shah classes textbook. Means out of the given RTP, I can bet on this 80% of the concepts are already covered in our textbook. Nothing is new, and whatever is new we are discussing with the help of this particular discussion. So this is the end of your labor variance calculation and standard costing first particular point. The next question which is covered in the RTP is related to the marginal costing. Let's have a detailed discussion about this. Let's start with question on marginal costing given in your RTP, where question number 12 says A Limited manufactures 3 different products and the following information has been collected from the books of account. As far as this chapter is concerned, this chapter is having only 6 different concepts involved in it. The concept number 1 is your preparation of income statement, which starts with sales minus variable cost, gives you contribution. When you deduct fixed cost from that, you get your final profit. Once this concept is over, second concept comes, which is related with contribution calculation. Contribution can be computed with the help of 3 different formulas. Formula 1 is sales minus variable cost, gives you contribution. Formula number 2, profit plus fixed cost. If you are going in the reverse order, then also you can compute the contribution. And third formula is sales into profit volume ratio. The concept number 3 is your break-even point. Formula for computation of break-even point is fixed cost divided by profit volume ratio. Concept number 4 is your margin of safety. Margin of safety is equal to profit divided by profit volume ratio, and last concept is called as desired sales concept. To calculate desired sales of any of the company, you should have two different amounts available with you. First is the amount of fixed cost. Second one is the amount of desired profit. You should add them and you divide them by PVR, profit volume ratio. You can get your desired sales. Entire chapter roams around only and only this particular concept. Let's see what all informations are given in this particular question. There are three products, S, T and U. Their sales mix is given. Means whatever total quantity has produced by the company, out of that quantity, 25% quantity is of product S, 35% quantity is of product T, and 40% quantity belongs to product U. Their respective selling prices are given, their variable cost is given. Selling price minus variable cost will give you contribution margin, which can be computed, but that will be available on per unit basis. Total fixed costs are given. Product wise fixed cost is not possible to calculate because fixed cost is the period cost, and total sales is also given. It is 1 crore 20 lakh. The company has currently under discussion proposal to discontinue to manufacture the product U. Means company is now planning to discontinue with product U and replace it with product M. They are planning to introduce new product and name of that product is M. And the following results are anticipated. Few estimated results are given when M is introduced. Their sales mix is getting changed. Selling prices are same for first two product. Variable costs are also same for first two product. Only your M related data is additionally given. Fixed cost obviously it will remain same irrespective of change in the production. But sales is again going to get increased by 8 lakhs rupees. Now revised sales is 1 crore 28 lakhs, which is expected by the company. We are required to compute the PV ratio, that is profit volume ratio, total contribution, profit and break-even sales for the existing product mix, and the same calculation we need to repeat for the revised product mix. Now if you check the suggested answer guys, in suggested answer they have given simple and sober solution. Where selling prices are recorded, variable costs are recorded, selling price minus variable cost for the first combination will give you contribution per unit, and here contribution related to all the product is available. If you calculate PV ratio's formula is contribution divided by selling price into 100. Your contribution and selling price both are available. If you solve this, you are going to get the profit volume ratio, which is computed and given in front of PVR. Now PVR is given, but each product is not 100% out of the sales mix. They are containing some weights, and that's why this PVR is multiplied with the different weights associated with each and every product. These weights are given here in the first table, 25%, 35% and 45%. When you multiply your PVR with these weights, you are going to get the weighted PVR. And weighted PVR, when you add up, you are going to get the weighted average profit volume ratio. Sir, when to use weighted average concept? When multiple products are given in the question. In that case, weighted average PVR can be computed. Now if you calculate the total contribution, sir, how to calculate the total contribution? Your contribution is equal to sales into PVR, correct? Your at present total sales is 1 crore 20 lakhs. Whenever you are going to multiply this with this 46%, you will be getting this total contribution. From that total contribution, when you deduct the fixed cost, you will be getting the present profit. So question has asked us to calculate three different points. PVR 46% computed, total contribution, total sales into PVR computed, profit also computed. Now only one thing is pending, that is break even sales, and break even sales is computed by using formula of fixed cost divided by profit volume ratio. Your fixed cost is 36 lakhs divided by profit volume ratio. You are going to get the break even sales amount, and this is the end of part of the solution. Same thing you need to repeat for the estimated data, where revised combination is to be taken, which is S, T and M, where selling price and variable cost are given. When you deduct them, you are going to get the contribution. You have contribution margin available with you. You just need to divide your contribution by selling price to get the PV ratio. PV ratio is available. Again, I am multiplying my PV ratio with the weights given in the question. It is 40%, 35% and 25%. When you multiply, your total PVR by the given weights, you are going to get weighted PVR, and whenever you are going to add up all these values, you will be getting weighted average PVR. Again, repetition is there. Once weighted average PVR is available, total contribution can be computed by taking revised sales amount into 50%. Deduct fixed cost from that, you will be getting proposed profit, and finally, for calculating break-even point, you should divide your total fixed cost by using your weighted average PVR, and this is the end of your marginal costing chapter. And the last practical question, which is covered in your RTP of cost and management accounting, is budget and budgetary control. This is little, you can say, a tricky question where all minor points you have to consider while solving this particular sum. So let's continue with this. Maharatna Limited, a public sector undertaking, PSU, produces product A. The company is in process of preparing its revenue budget for the year 2022. So company is planning to prepare their revenue budget for the coming year. The company has the following information which can be useful in preparing the budget. The very first thing, it has anticipated 12% growth in sales volume from the year 2021 of 4,20,000 ton. Means at present sales volume, sir, what is the meaning of sales volume? Sales quantity is 4,20,000 tons, but it is anticipated that it will be growing by 12% in the next year, and that is why very first, if you check the sales revenue which is given in terms of tons, it is recorded 4,20,000 in the current year, previous year, and in upcoming year it will be increasing by 12%. So simply on calci you can do this, 4,20,000 plus 12%, you are going to get the second figure. Now next point says that the sale price of 23,000 per ton, this is the present sale price, will be increased by 10%. Your selling price is going to get increased by 10%, but there is a condition, provided, question say, provided wholesale price index, that is WPI, increases by 5%. Means it is expected that the selling price per ton will be increasing only if your WPI increases by 5%. If WPI is not getting increased by 5%, then there won't be any change in the selling price. So for implementing this particular change, we need to check whether WPI is increasing or not. Please check point number 4. It clearly states that the projected increase in WPI for 2022 is only 4%. Means your WPI is not getting increased by 5%. That's why this change will not happen in future. Your selling price will remain constant, 23,000 in both the period. You can check here, 23,000, same selling price is taken. Why? Because of only one reason, your WPI has not increased by 5%, it has increased only by 4%. That's why there is no change in the selling price. Your sales quantity into selling price will give you total sales revenue, and sales revenue is computed. They have recorded all the amounts in lakhs. They have removed all 5 zeros out of all the total amounts. After that, let's read further. We have just completed with point number 1, point number 2 and point number 4 also in advance we have considered. Point number 3 says, to produce 1 ton of product A, what is the input output ratio is given? If you are willing to get 1 ton of product, means final product, you should introduce 2.3 tons of raw material. So this is my finished goods, this is my raw material. As per given information, for getting 1 ton, 2.3 ton of raw material is required. So for getting 4,20,000 tons, how much material is needed? That you need to compute by cross multiplying into 1 divided by 2.3. Your material needed you will be getting on your calculator. Kindly check the values, whatever values you will be calculating, correct? No? So 1 ton you will be getting 2.3 tons. Then your final product which you are planning to prepare is 4,20,000 tons as per given information. Then for this final product of 4,20,000 ton, how much raw material is needed? 4,20,000 multiplied by 2.3, it is equal to 9,66,000 quantity of raw material consumption is needed. For second calculation also, if this is the composition given, 1 ton gives you, 2.3 tons of material gives you 1 ton of output, then for 470,400 of output, how much material is needed? 4,70,400 into 2.3, you are going to get 1081920. You can cross verify. This is what we have computed. Now, this is the only quantity of raw material which you are going to consume in the current year as well as future year. The price of raw material is given, that is 4,500 per ton at present. The price of raw material will also increase by 10% if WPI increases by 5%. Is your WPI is increasing 5%? No. So this is invalid change which we are not going to consider while solving the sum, as WIP is getting increased only and only by 4%. That is your WPI. Sir, what was that WPI? WPI is wholesale price index. Wholesale price index is not getting increased by 5%. So your price 4,500 will remain constant, and they have taken 4,500 in both the places because WPI has not increased by 5%, and this multiplication will give you amount of RMC. So hope you have understood till this point. Sales quantity we have calculated, selling price we have taken as same because your WPI has not increased by 5%. Sales value we computed by multiplying volume and price, then raw material consumption quantity we ascertain, and then we multiplied that with the material price. Let's move further. Point number 5 says a total 6,000 employees works for the company. So in all, 6,000 workers, employees are going to work for your company, and the company works 26 days in a month. Out of the 6,000 employees, 85% employees, 6,000 into 85% means 5,100 employees of the company are permanent and getting salary as per 5th year wage agreement. The earning per man shift means an employee cost for a shift of 8 hours is 3,000 rupees. So each employee for each day is getting 3,000 rupees amount excluding terminal benefits. Next point says the new wage agreement will implemented from 1st July and it is expected that 15% increase in pay will be given. So this particular information belongs to only 85% employees. So for 85% employees means for 5,100 employees, you are going to pay 3,000 rupees per day. Now these employees are going to work for 26 days in a month, and we are preparing statement for a year. That's why we are further multiplying it by 12. Hope you are understanding this calculation. 5,100 employees are getting paid as per 3,000 rupees each. They will be working for 26 days. So I multiplied that amount by 26. So per month amount is available on my Calc, and to get annual figure, we are going to further multiply it by 12. So you are going to get this figure on your Calc. Divide that figure by 1 lakh. You will be getting answer in lakhs. It is 47,736. Same way. The same amount you need to calculate, but in same amount certain additional cost is to be incurred, as it is clearly given that 15% increment is expected in this particular cost. Sir, how to calculate this incremental cost? See what question says. From 1st July 2022, sir, 1st July 2022 means not from the beginning of the year. It is happening in between the year. Your financial year started from April, May, June. For first 3 months there is absolutely no change. First check whether financial year is given or calendar year is given. First check that. Now budget for the year 2022 is given, means company is using calendar year, and this is very important. This calendar year always starts from January. So if you count from January, February, March, April, May, June, for first 6 months your workers are going to get only 3,000 rupees. So you can check the calculation. They have taken number of employees, they have taken number of days, they have taken 3,000 rupees, but they have multiplied it only with 6 months. So what about the remaining thing? Remaining 6 months, in this 3,000 plus 15% wage rate is to be given to your worker. So 3,000 plus 15% revised applicable wage rate for the remaining 6 months is 3,450, which will be paying to all the 5,100 employees for 26 days a month. Understood? So in first month you are getting plain wages, second month you are getting plain wages for first 6 months, and for rest of the 6 months you will be getting the incremental wages, which is 15%, and this is how this amount is computed. But this one is only 85% part. What about the rest 15%? It is also mentioned in the question that the casual employees, means remaining 15% employees, are getting daily wage of 850. The wages in linked to consumer price index, the present CPI is 165.17 points, and it is expected to be 173.59 points in year 2020. Index is getting changed. So at present, out of 6,000, if you compute 15% employees, your casual employees are only and only 900. 900 employees are getting paid at the rate of 850 rupees each per day. Now they will be working for 26 days, and according to the 12 months a year, yearly amount of wages is computed. This is the first thing. Now try and understand this 2386.80 amount which you have given to your workers is computed according to the present index of 165.17. So it is for 165.17. I just need to compute the index price which is changed to 173.59. For 173.59, how much wages I need to incur? So 2386.80 into 173.59 divided by 165.17 will give you the same amount on your calc. It is 2508.47. You can cross verify. So we computed sales, we computed material, we computed wages. Wages we bifurcated into two parts, 85%, 15%. This 6 monthly calculation is very important. Now after that, remaining cost items are given. Point number 7. Power cost for the year 2021 is 42 lakhs for 7 lakhs units. So very first 42 lakhs divided by 7 lakh, I have computed 6 rupees per unit calculation. Correct, no? 1 unit consume 1 kilowatt. 60% of the power is used for production purpose directly related to production volume, and remaining are for employee quarters and administrative offices. You have used 60% of power for productive purpose, means for factory, and remaining power you are using for your employee quarters and administrative purposes. That means what? All power cost is divided into 3 parts. Production power cost, then employee and office related power cost, this one is given in the question, and total consumption we can compute according to this bifurcation. According to the given breakup, out of total power, 60% related to production. What is our quantity of production? 4,20,000 and 4,70,400. So this quantities you should take, and you have to calculate 60% of that. Sir, how to calculate? Try and understand, it is very simple. Now if you want to calculate this easily, you are going to get the same quantities again as this 7 lakhs is given in the question. Sir, where it is given? See here, total 7 lakh units are given. 7 lakhs into 60% is 4,20,000 units of power you are consuming for production purpose. Correct? Now plus 12%. Again you are going to get the same quantity. See here, same quantity. Directly also you can take these quantities from here, and same quantities you can put here. Else you can calculate by using the given information from the power. Now first part of 7 lakh is recorded here. Second part is the balancing figure. First part is recorded here. Second part is the balancing figure. Now sir, why this power consumption is not increased over the period of time? See here. During the year 2021, the company has paid rupees 60 lakhs for safety and maintenance. Everything is given. The amount will increase in proportion to the volume of production. Your production related power consumption is going to increase in the volume of production. In same proportion, it is going to get increased, means it is increased by 12%. Then during the year 2021, the company has paid 1,20,000 for purchase of diesel. This is diesel cost and other information is given. So it is clearly mentioned that whenever you are using your power, if power is incurred for production purpose, that will increase in the proportion of production unit. But when it is incurred for the purpose of employees and office units, in that case there is no information given. That's why we have taken the same number of units here. So by adding up both the values, we have calculated calculated the total power consumption unit, and per unit rate any which way we have computed in the beginning only. So 7 lakhs into 6 and 7,50,406, you are going to get the power consumption. Safety and maintenance cost is the next item which is given directly. Your safety and maintenance cost says that 60 lakhs is the at present cost, see here recorded, and it will increase in the same proportion. So I have increased it 60 plus 12%, it is equal to 67.2. Hope you are not getting confused, student. Now some students are stuck over here. Production units. If you are consuming power and if you are producing only 4,20,000 units, whenever your production is getting increased, power units will get increased. Your employee and office cost is generally remains constant. According to production, your employee and office cost is not going to change. No, that's why I have taken these elements as same, and then I have taken the total. Then further I multiplied them with 6 to get the total power cost, and total power cost is computed. Done. Safety and maintenance cost directly given. If you read the next point, diesel cost is also given. It is 1,20,000. Again, it is expected to increase by 15%. So first diesel cost is 1.2, that is 1,20,000, and when it will increase by 15%, so your 1,20,000 plus 15% will become 1,38,000, and that amount is also recorded here. They have just shown it separately. During the year 2020, when the company has paid 6 lakhs for car hire charges, they have paid 6 lakhs for car hire charges, excluding fuel cost. In 2020, the company has decided to reimburse the diesel cost to the car rental company. Reimbursement we have recorded. Doing this will attract 5% GST on reverse charge mechanism, RCM basis, on which the company will not get GST input credit. Input is not available. So we need to compute here GST also. So on this 138, 5% GST is applicable, and whenever you are going to calculate the GST, you will be getting your GST here automatically. So on this calculation of higher charges, doing this means this reversal of 6 lakhs rupees car hire charges excluding fuel cost we have already charged, and the same higher charges we need to incur in future. Correct? And from that particular calculation, if you are going to calculate your GST, you will be getting 369 of this combined amount, 7.38 into 5%, you are going to get the GST. So higher charge plus fuel cost, total cost will attract some GST, and that GST is taken into consideration if ITC is available. If claim is available, in that case we are going to exclude the GST from our calculation. So here our higher charges cost is computed, and finally last point says depreciation on asset is given, and it will be 15% lower. So first record this amount in current period, and then for the next period you should deduct 18040 minus 15%. Automatically you will be getting this particular amount, and finally when total cost is available, all the cost values you should add and deduct these cost values from your sales. You will be getting your profit. This is the thing which is asked in the question. Question is asking us to prepare the revenue flexible budget for the year 22 and also show the budgeted profit and loss. So we have recorded all the details according to the given information, and we computed the profit and loss associated with the different period. First year loss, second year loss, everything is computed, and this is the end of your RTP practical question discussion, where we are ending with the budget and budgetary control. Guys, before appearing for the examination, kindly revise all these 13 questions thoroughly for one more time, so that the paper which you are going to appear of cost and management will comparatively, you are going to feel that comparatively comfort level while solving all the question, as almost all the concepts of your syllabus are covered in this RTP. So kindly focus for one more time on this RTP. I am wishing you very all the best for your examination from JKC whole team. Wish you very all the best. Take care of yourself, prepare well, take care of your health, appear for the examination and come with your positive result with flying colors. Thank you very much. Take care of yourself. Thank you. Bye-bye.